Entire year, Anna. Those are just some of your stocks to watch.
Okay, so we look for evidence of what the China narrative is doing to European stocks today. We'll keep an eye on the banking sector because and the gilt market open because of that wage data we had out of the UK. Oh, interest rates going to stay higher for longer. What does that do to banks is certainly one of the questions we will be asking. This is the market open then. We have the FTSE 100 down by 0.2%. The Stock 600 yet to open. The CAC 40 yet to open. But a little bit of negativity then coming through on these markets just in the shape of that FTSE move. There you go. The overall Stock 600 then, Critty, is down by 0.3%. So we do have a little bit of negativity coming through. I wonder if it's concentrated on things that are exposed to the Chinese consumer. If the markets are not overly impressed with the idea, at least, of a 5% growth target, or not overly impressed with the uptick in budget deficit that could be priced into China next year. What does that do to sentiment? The CAC 40 down by 0.4%, the IBEX down 0.5%. Critty, what do you see in the sector view?
Yeah, underperformance when it comes to the commodity stories. Shell, BP, Glencore, that seems to be where a lot of the underperformance is dragging the Stock 600 down, and the UK, I should say, as well. But to the upside in the Stock 600, you are seeing a little bit more optimism in France. Despite the red on the screen that you're seeing across all the sector space, there are some of your biggest upside contributors are located in France. I think that's interesting given this kind of political overhang, Anna, that we've been talking about. But right off the bat, I'm looking at Airbus, for example. I'm looking at Safran, among others, that are starting to move. Perhaps a little bit of an aerospace and defense theme that we need to keep our eye out for.
Yeah, those energy names really are the worst performer, aren't they? Down by 1.7%. Any in particular, Total Energies. We will certainly pick up on that theme, not the stock specifics, but what's been happening with the underlying commodities with our guest from Citi. A little bit later on this hour, we'll have an opportunity to talk about some of those energy market dynamics and wider commodities. Healthcare also under pressure then, down by just over 1%. So that's the second worst performing sector. Not a huge amount of positivity. No sectors in the green, Chrissy.
No sectors.
I bring you no festive joy.
It's okay. We got red on the screen regardless. There's a little bit of Christmas in there somewhere. But Airbus and Safran, I think, are still getting a lot of volume, and you can see that on your screen right there. The only thing I'm seeing in terms of kind of movement is getting a little bit of an upgrade over at Deutsche Bank. Airbus is a price target of 185 euros. That might be taking Safran with it. Just when we need Guy Johnson, he chooses not to be here. I mean, come on. This is his arena. He would completely nerd out about it. But it looks like that Deutsche Bank stamp of approval is helping it. But net, as Anna was saying, you are seeing red on the screen. Sentiment is certainly a little bit of a frowny face this morning. Let's talk
that's
about
the technical term.
Yes, that's I'm bringing up the professionalism here. Let's talk a little bit about that political overhang, though, because that seems to be what's navigating these markets. That underperformance in France, largely around those jitters, the political jitters that we're seeing there. BlackRock's Helen Jewell spoke to this program about the diverging picture at Europe's core. Take a listen.
The DAX has had a really, really good run in the last few months. And a lot of that is linked to those constituent parts, the strength of the industrials within them. Unfortunately, what France has got at the moment is the luxury goods, where people are feeling a little bit jittery anyway about luxury goods. And therefore, the component part can't do enough to outweigh the jitters. And on top of that, the jitters around France are certainly greater than the jitters around Germany at the moment.
Joining us now, Karen Ward, Chief Market Strategist for EMEA at JP Morgan Asset Management. Karen, a pleasure to have you on the program. We were just hearing from Helen there that some of those political jitters may not be reflecting necessarily in those indexes simply because they're constructed in a very different way. And I'm curious what that looks like to you. Every day we see underperformance in France. We say there is a real hesitance to invest in this part of the world. Is it that simple that if there's political uncertainty, you stay away from the index, or is there more to it?
I think often you're questioning, is it darkest before the dawn? What could be the catalyst that's coming out of a period of political uncertainty, economic weakness, which actually then gives you the upside? And I think that's what's underestimated about Europe at the moment. Across the region, the political problems, I think, stem from an electorate saying, we need more growth here. So therefore, enough of this fiscal break business in Germany, enough of this talk of returning to austerity. We want a growth agenda. That, I think, is going to feed through not only to fiscal policy, but to regulatory policy, which I think has also really hindered Europe. And I think the penny is dropping in Brussels, that it's time to bring back a growth agenda. It's time to get the region moving. And I think also the other, perhaps first responder will be the ECB. There is a recognition in Europe, if they don't get a handle on growth, these political problems were just at the beginning. So actually, I think, it's one of those moments where the news flow today looks weak, but I think that's going to be the catalyst for positive news in 25.
That catalyst, though, how much of it is at the whim of what happens in the United States? And there seems to be this divergence of even in good times by the U.S. because it's outperforming, in bad times by the U.S. because it's a defensive trade. Where does Europe fall in that?
Yeah, I mean, you definitely have to think about how Europe is going to sit within any trade ambitions of the U.S. I'm working on the assumption that most of that hostility is focused on China. And actually, Europe benefits from being a bit of a friend-shoring partner to the US, that a deal can be done. So I don't think Europe is going to be in the eye of the storm. I think a deal on the Europe buying more energy. Obviously, we are now buying a lot more LNG, replacing Russia in Europe anyway. So I think Trump could speak to some grand deal that he's struck with Europe. So I'm not too worried directly about the trade hostility, but obviously ongoing weakness in China because of the US relationship is going to have ramifications. And that's troubling the market this morning. But again, I think we've got to think, OK, well, what comes next? And I'm not at all surprised that China aren't announcing any great stimulus packages right now. Why would you? Wait till, next year when you're in the eye of the storm and Trump is unleashing whatever it is he's going to, and then pull out your stimulus package. So it's coming.
But Karen, what if he doesn't unleash anything? Then
Happy
what?
days.
Is that when you buy Europe?
I certainly think that two things. One, we have to remember in this whole US versus Europe debate that yes, the US economy is going to do better under Trump, but that is in the price. That is why you're paying 22 times high earnings expectations for the US market and 14 times lower earnings expectations for the European market. There is not much expected to happen in Europe. So you're always asking yourself as an investor, well, where could the surprise come? And that's where I think we need to have a think about quite how overweight the US you want to be relative to Europe. Because if I'm right on some of the policy catalysts coming through in China, in Europe, then maybe that's where the surprise is. And of course, we've got to think about how the mega cap tech story plays through, because I personally think in terms of how Europe performs relative to the US in 25, how the tech boom plays out is way more important than who's in the White House.
I suppose that could still point to US exceptionalism, though, couldn't it, Karen? So even if you take away the politics, US exception, I mean, do the valuations get justified by that US tech narrative, which Europe just does not have?
Well, that's the $1 trillion question.
Yeah.
I call this tech story that these guys have A-star student syndrome. For the last few quarters, they've come into the earnings season and they've delivered an A-star report. And it's been outstanding. They are delivering good earnings. The problem is now the market expects them to get A-star forevermore. So if they only come in with an A at any point next year, the market's not going to like it. And I do think they're at the tricky point of getting those A's, stars, because they've created a product. Now they need to sell it. They've created a product. They've invested massively in it, which has benefited the little tech community amongst themselves. Now they've got to go and flog it. And that's what we're going to learn over 25. Is there demand for all these AI products? What is the broader corporate universe willing to pay? This is where it's going to get tricky. So I don't think it's a bubble in any way, shape or form, but I think they are priced for a very good outlook. I'm nervous about that. So for me, it's about risk management. and thinking about diversification to some of the less well-hyped stories.
Yes, so we're always looking for signs as to whether they're just still supplying the hyperscalers or whether this is a broadening theme out to other businesses really making the most of the AI potential. Let me go to something you mentioned, surprises, and we got a surprise this morning on the UK side with the wage data coming through, and we see response in gilt markets across the curve. We're up by 8 basis points, just shy of the 2-year, the 10-year up by 6 basis points. We spoke to Pooja Kumra from TD earlier on the gilt side, and she was saying, look, it doesn't change our expectations really for Thursday. We've got other data to come. It's not as if anyone's going to suggest that on the back of this high wage data we get a hike. So, hold as the expectation, that remains the case. But what difference does this kind of data make to the longer-term picture for the UK? I mean, rates not coming down as much as we'd expected next year, perhaps?
Yeah, I mean, I've never really bought into this whole idea that UK inflation was going to tail off nicely and the Bank of England were going to be able to be taking rates down considerably. The UK, the labour market is structurally changed post-Brexit. When we were a member of the EU, we had this perfect elasticity. Whenever an industry ran out of workers, they would just arrive almost instantaneously from the continent. And that really gave us what economists call the flat Phillips curve. Very little wage growth, no matter the conditions of the economy. We're just not in that world anymore. Yes, we still have migration, but that frictionless labour market that we had from migration from the continent is just not there. We are in a very different world in how our labour market behaves. And even though activity is weakening, we're seeing activity weakening, we're seeing the labour market weakening, I don't think we're going to see that coming through in wage growth. And this puts not only the Bank of England, but the government in a very difficult position because, of course, the national insurance hikes, I think there are going to be questions. Is that contributing to this weaker growth, higher inflation combination we're looking at?
Yes, and to that point, Chrissy, we're just seeing a headline across the Bloomberg terminal saying traders now see less than a 50% chance of a third Bank of England cut in 2025. So the effect of that wage data dialing back those expectations of cuts next year.
Yeah, I wonder how much the liquidity story plays into all of this on both sides of the Atlantic. And Karen, I pose this question to you because we talk about it all the time in the context of central banking and the QT, et cetera. But you mentioned the trillions of the tech boom, et cetera. How much of that is just a liquidity play at the end of the day?
So I certainly think, this is where things like gold and Bitcoin have a lot of signaling context, like how much cash is still washing around there. We see it as well in our money market funds. There's still a heck of a lot of cash out there, either working or waiting to be put to work. And that does play into, I think, general attitude to where we expect how risk will be supported. It's one reason we're very constructive. But of course, where that liquidity is flowing is the really important question. It has been flowing to the US, as we know, in all asset forms, and that's why the dollar is also so strong, because of demand for those US assets. Does that continue through the course of next year? I'm not so sure.
It seems the market has been quite quick to price in some of the positive signals from the incoming Trump administration around what could be done for growth in terms of tax cuts and a focus on growth and other positives in the eyes of investors, and less quick to factor in the negatives. What do you worry about as we head to 2025, Karen? I hate to leave it on such a negative, but as we head into next year, and you clearly seem concerned about valuations in the US and tech stocks in particular. What is it that changes the story there?
Well, I just think we have to remember this is not 2016, and running the same playbook, I think, is risky. So, he came into office last time with inflation that was stuck below target and a 3% deficit. So slashing taxes and whilst also doing some tariff policy was very beneficial for the US and very good for corporate earnings. However, now we've got a 6 to 7% deficit and inflation stuck above target. So there's just that slight risk if he does try to, and we don't know exactly what he will enact and what versus what he's said on the campaign trail. But if he does try very hard to run that same playbook and really deliver on those campaign promises, we could see the unintended negative consequences. We could see inflation staying stickier and consequences for the Fed. We could see inflation staying higher and the consumer not being happier about that. And we could see the bond market unhappy if he really starts to talk about further tax rises. So I just think there's perhaps too many investors running the playbook of 2016, and I just think the world is different.
All right. Karen Ward, pleasure to have you on the program. Chief Market Strategist for EMEA at JP Morgan Asset Management. We look forward to having you back very, very soon. In the meantime, a quick check on those core 6. Karen was talking about the Mag 7. Let's talk about Europe's equivalent here. Red on the screen for most of the companies that we've got our eye on. Novo Nordisk is the underperformer this morning, down about 1.7%. We're going to dive into the details of that stock in just a moment. Ferrari also taking a little bit of a beating, down about 1.4%. The rest is kind of sanguine. Even LVMH down about 0.4%, maybe in line with perhaps that China read-through, but then also that French political overhang as well. That's just your core 6. I hope I did Guy a little bit of justice there. Let's get a check on some of the individual stocks on the move. Joe Easton.
So one of the best performers today is here in London, and it's Canal Plus. Now remember, this stock did list yesterday, spun out of Vivendi, had a bit of a rocky start to trading it yesterday, but gaining today. There is some analyst commentary on the potential growth in its subscribers. It, of course, the French television company, as I say, spun out of Vivendi with a market cap around 2 billion, one of the best performers on the stock 600 today. Then in terms of healthcare, we got an update from Sandoz. Now this is a generics firm saying that it's going to pay around $275 million to settle a case related to antitrust in the US. That's a company, of course, spun out of Novartis, and that stock actually hit this morning, coming up a little bit, was down around 1.5% at the open, but coming up now down 0.4% for that one. But one stock getting hit quite hard today is Bunzl. Critty touched upon that one earlier, reporting a bit of weakness in their top line sales growth. It's the UK food distribution company, a £12 billion company, and on the FTSE 100, but the worst performer on the FTSE today, coming down 5%, a pretty sharp move lower in that one. Then in terms of those other UK stocks, as Karen was discussing, the potential outlook for sustained UK inflation following that wage data, and we are seeing some weakness in the home builders and a little bit in the banks as well. Of course, we will get CPI tomorrow and the Bank of England on Thursday, as we said earlier, but continued losses for the home builders at the moment. Then in terms of the rating changes, did want to take a look at Airbus. This was another one mentioned earlier. Now Airbus up to buy at Deutsche Bank along with Safran. Both of those companies are upgraded, but it's the outlook for deliveries at Airbus which is better than forecast according to Deutsche Bank, and the valuation looking pretty good as well according to them. The other one, this one hit by a Goldman Sachs downgrade. We've got JDE Peet's, the coffee company, reinitiated at sell over at Goldman. They say that a 65% jump in the price of coffee futures in the second half of this year is going to hit the company, and that one is declining today over in Amsterdam, down 2.8%.
Very appropriate for this time of the morning. Thank you very much for that one. Joe Easton ending on the coffee news from our equities team, of course. Coming up on the programme, why the rapid rise of weight loss drug maker Novo Nordisk has hit small businesses in Denmark. More on that story next. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Wait is on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching The Close.
Welcome to Balance of Power.
This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
We need to get better cooperation between the private markets or the business world and the political world. And I think that cooperation hasn't been that good for the last 5 or 10 years. So hopefully there's an opportunity also, with that Draghi report in mind and what's happening in the U.S. in mind, to drive capital, to drive change. It's really needed for society.
Christian Sending there of EQT Partners CEO, really commenting on this idea that PE could come to the rescue of some of these fiscal governments that are perhaps trying to offload some of their infrastructure deals. That's exactly what's happening, it feels like, in Italy. News that CVC Capital Partners is exploring a potential purchase of Vivendi stake in Telecom Italia. It could pave the way for a takeover of Italy's biggest telecommunications company. Let's get more out of Paris from Bloomberg's Benoit Berthelot. Benoit, pleasure to have you on the program. I'm a little obsessed with this deal, as my team knows. CVC has made this bid before and been rejected before. Why is this time different?
So it's different because Telecom Italia has been struggling lately, has a big debt, and last summer finally broke a deal with KKR to split the network, which was the best valued part, a 22 billion deal. So now what remains is the consumer unit of the company, and this is attracting fresh interest. Now, we report that the stake that's reportedly for sale is Vivendi's stake. The French media company has had this stake for a long time. It's been a pain for the company, and they're just at the moment where they are themselves splitting and reconsidering their stakes in other businesses. So CVC, as we report, would be interested in buying that stake, and later on could buy a more important stake or just buy the remaining of Telecom Italia. And they could find value in that business because there is a consumer unit, but there is an enterprise business, and there is a Brazilian unit as well. So they could find the inner value of this asset.
Yes, so that's why CVC is interested. Benoit, why does Vivendi want to find a buyer then for this stake?
So Vivendi is just in the middle of an overhaul, really. Just yesterday, as we just discussed, they've been spinning off 3 units. Canal Plus is their pay TV business that they've been listing in London just yesterday. There is an ad business, Havas, that's been listed in Amsterdam, and there is a publishing business listed in France. So the remaining of Vivendi is really now a portfolio company, still listed in Paris, still called Vivendi, and it has that Telecom Italia stake. It has a stake in Universal Music, for example, but it's clearly a new phase for the company and for the billionaire Vincent Bolloré and his family, and they're more free now to reconsider what they want to do with all these stakes that are just in a portfolio company now.
Okay, Benoit, thank you very much for bringing us the latest twists and turns of this complex, long-running saga. Thank you, Benoit Berthelot, joining us there from Paris. From Paris, let's go to Copenhagen. In Denmark, Novo Nordisk's rapid hiring spree is making it difficult for small businesses to find staff, forcing some to close down. Let's bring in Bloomberg's Sanna Vass, who is in the Danish capital and can talk us through the story. So, Sanna, Novo Nordisk is the #1 driver of GDP and job growth in Denmark. It's a big player on the index, of course, of Danish stocks. Tell us more about the fight for talent in Denmark.
Yes, well, Danish economy is doing well. Employment is at record high thanks to Novo Nordisk. And of course, that's positive for Denmark overall. But it's also not everyone who's benefiting from this. Denmark is a small country. We're about 6 million people. And Novo Nordisk is on such a massive hiring spree at the moment that they're vacuuming the labor market for everything it can get. And Novo can attract a lot of employees. They offer attractive salary, good benefits, and it's a place that people want to go and work. But for other companies, especially in those areas where Novo is present and expanding, it's causing a lot of struggles, especially because businesses are losing staff to Novo and they're struggling to recruit. And it's not just pharmaceutical peers, it's across the board. We're seeing schools, public hospitals, armed forces, auto repair shops losing staff and struggling with this. So it's really starting to cause some pains.
What are the consequences, though, for the Danish economy? When you talk about these kind of struggles and these pains, what happens after?
Yeah, well, for some businesses, it means that they just can't grow as much as they would have liked to or would have been able to. We're seeing some having to reject orders. Others are having to delay expansion projects because construction companies can't find enough staff. I also spoke to a company that decided it was easier to just move production abroad, and another that decided that he could simply not continue that way. He was just exhausted from having to recruit staff, and he closed his shop. He was based just half a mile away from Novo Nordisk. It was a car service shop. And so that's, of course, bad news for those businesses, but also for the Danish economy as a whole. It means that growth is very much centered around this one company, Novo Nordisk. And it does create some risk of concentration that could become a problem later on.
Sanna, thank you very much. Thanks for joining us. Bloomberg's Sanna Vass there in Copenhagen with the many ways then, Chrissy, that the Novo Nordisk story impacts on the Danish economy, talking about the labour market, putting the labour market front and centre there. But of course, we've talked about the weight that this has on the Danish market, of course, the stock market and the impact it has there. So this is such a large business, and there are quite a few notable large businesses in Denmark, but some of them having this outsized influence on what happens in the Danish economy.
I think I read a Goldman note somewhere that Novo Nordisk specifically was contributing, I think, 60% of their entire global GDP, and 60% of the Novo income comes from the United States. It's a very interesting ripple effect from economy to corporate to economy again.
Okay, coming up on the programme, we will focus back in on some of the latest developments in China and how they're likely to impact or be influenced by commodities markets. We'll make that link shortly. We'll be joined by Max Layton, Global Head of Commodities Research at Citi. This is Bloomberg.
You missed it on Bloomberg, the China show.
What's been the sentiment? What's been the reaction to this U.S. election outcome on the ground?
They were pretty much ready for Donald Trump. There was a high expectation that he could return to the White House.
We have dealt with him before, and after quite a few years, China simply is better prepared, and China, psychologically speaking, is much more prepared in dealing with him again.
probably are fully prepared for Trump to impose higher tariffs on China.
What's the tone as they were talking to really a global investment?
Right. The openness of China, including the capital markets, Hong Kong being an international financial center will be extremely important in channeling global investors.
Don't miss the China Show live every weekday.
Connection lost.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world right here on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
This is the opening trade, about 30 minutes in today's session, and it's looking to be a little bit of a poor session for some of the bulls. You are seeing red on the screen, a little underperformance in France. This has been the theme that we have seen for the last couple of days, but perhaps a little bit of green on the screen in other parts of the markets, although I think I said that too quickly. When you look at the commodity markets, it's a similar story. Risk sentiment, I think, across the board is where you are seeing a lot of pain. Oil right now at about a 73 handle, just shy of 74. Let's go there. Oil steadying, of course, on the back of lackluster economic data from China. Crude set to end the year modestly lower on expectations of a glut next year. Max Layton, global head of commodities research over at Citigroup, joined us around the table. I was hoping for a little bit of optimism because I feel like a 74 handle is still maybe one of the strongest levels we've been at in a couple of weeks here. But walk me through the oil story. How much of it is China? How much of it is really the United States?
Well, yeah, the oil story. Overall, the market, we think, is broadly balanced this quarter, and it's going to stay broadly balanced for the next quarter as well. So it's quite vulnerable to any kind of supply disruption, whether it's Libya or fears of supply disruption in the Middle East. On the demand side, yeah, some good news from China with the 5% target, well, at least that being mooted by some media outlets this morning. And, you know, that's supporting things as well. So for a while, oil's going to hold up. This big surplus doesn't really hit until the second quarter.
How believable is that China story? We talk about all the time in terms of every time we get China headlines, it moves the entire commodity complex in the stock market. Shell, BP, Rio, Glencore, among many, many others. But we're still wondering about that believability factor. It's enough to move the markets, but is it enough to deliver?
Yeah, we don't think it's enough, right? So in historical context, when China comes out and does a major stimulus, you're talking about the credit impulse going from something like negative 5% of GDP up to 10% of GDP, so a 15 percentage point swing. The kind of fiscal stimulus and credit easing that we're talking about is 2-3 percentage points. So it's a tiny fraction of the stimulus we saw in 2016, for example, or in 2020. And it's probably enough to, you know, support things, some things, but it's not enough to offset, for example, the trade war that is highly likely to start in the first quarter.
Max, what about the oil intensity of the Chinese economy? Tell us a little bit about that, because we have, you know, we're used to watching China very closely as one of the big drivers of the oil price, along with many other areas of the global economy. But then we talk a lot about China pivoting towards EVs and moving away from that kind of energy product. So talk big picture about how China responds now, or how China drives, rather, the oil price at this point.
Yeah, I mean, this is a great point. The oil intensity GDP slowed down dramatically in China, and I mean, one thing we've been super focused on is how China is overcoming a lot of the problems that we talk about outside of China with respect to electric vehicles. And this is all kind of rapidly happening over the last 12 months. So intensity or penetration rates of electric vehicles in China have gone from around 18 months ago, they're around 35%. They're now getting up to 50 to 55% on average last month. I mean, it's almost doubled in terms of penetration rates, and that's significantly slowing oil demand growth, because when you're adding to the pool of cars, you're adding cars that aren't consuming oil, and you're scrapping cars that did consume oil. For the ICE vehicles you do add to that fleet, they tend to be more efficient in their oil consumption. So, yeah, the car fleet's a big issue for oil demand.
And so you have a quite bearish forecast for next year. You're talking about seeing oil going as low as $60 or lower by the middle of 2025, I think. I mean, what's the key driver of that then? Is it that China story?
Yeah, I mean, we're not particularly enjoying being, overly bearish on anything, really. But, the only thing we dislike more than being bearish is wrong. So there's a lot of things going wrong with the oil market. Basically, when we line up the base case, this market has slowing demand growth, significantly accelerating supply growth. The supply growth is coming from more than 10 non-OPEC plus countries, so it's very broad-based. There's overcapacity. And, the U.S. economy has been slowing down now for 2 to 3 years. China's weak. They've got the trade war. What haven't I mentioned? There's the potential for geopolitical problems that we've had all year to at least dissipate, or at least come off to some degree, and the potential for grand bargains as well. And so I mean, the list is really quite long. Having said that, we're not bearish forever and down to $50, and there are a lot of countries that are growing their oil demand, whether it's India or a lot of other Southeast Asian countries. So, we've got it stabilizing at $60, which, I mean, it's not an amazing price, but it's not as bad as some of the bears out there.
Okay.
Yeah.
But you talk about the slowing dynamic in the United States as well, but there's also a conversation that there'd be an inflation tick up in 2025, potentially into the rest of the year, because of the geopolitical tensions that you actually mentioned. The last time we saw that inflation tick up, commodities were the place investors went, even if they weren't actually commodity traders. They wanted that exposure as an inflation hedge. Do you see a repeat of that?
Sure. I mean, inflation's holding up. Our house view is U.S. inflation does continue to gradually come down over the next 6 to 12 months. Gold's in a little bit of a Goldilocks situation, so I'm kind of shifting the answer towards gold, because I think whether inflation comes down and the Fed starts cutting rates, or whether inflation surprises to the upside and the Fed keeps rates higher for longer, people are going to be wanting to add to their gold portfolio over the next 12 months because, frankly, U.S. growth, U.S. labor market's been slowing down for a couple of years. And until that puts in a bottom, until that, starts to turn around and people start to get more confident about global manufacturing, U.S. manufacturing, people are going to want to hedge against that potential for equity downside. The equity's had an amazing run, and a lot of that has been because of the resilience of the U.S. economy. So at some point, maybe there's a turn, but until that point, gold's going to catch a bid, kind of like 2007. What happened in 2007?
Right. You go back to 2007. I was looking at some comparisons back to 2010, Max, because we've seen a 29% or so increase year to date in the gold price. That is the biggest increase since 2010 in the wake of the GFC and in the run-up to the European debt crisis. What are you watching? What's going to change on the gold story for you? So maybe the geopolitics. Yeah. What about the central buying narrative, that impulse to buy? Is that going to remain?
Sure, yeah. I mean, a lot of the drivers of the gold bull market this year, I mean, they're highly unusual in the sense that real rates have been correlated with gold for a very long time and rarely broken down in the last 15, 20 years, but it's completely broken down the last 2-3 years. So the last couple of years have been all about central bank buying and hedging US downturn and global downturn risks for us. And we've quantified that in this gold investment as a share of mine supply framework. And essentially, this single variable explains most of the variation in the gold price over the last 55 years, and certainly explains this recent bull run.
Is there an argument to be made that gold has rallied too far? That if you're going on a valuation perspective and everyone is looking for this trade, this is the exact time to pull out? When I'm looking at a precious metal that's at 2,646, that's pretty high.
Yeah, it's done really well. But I guess I would just counter that by saying US interest costs for the government of the US have been going up by 0.6% of GDP for 3 years straight. It's now 1.1 trillion on its way to 1.3 trillion. So the US has government budget issues, which they may solve by cutting spending significantly, which would obviously potentially lead to a downturn in the US, which will lead to more gold buying, or they don't solve the problem and you have this kind of high interest rates hurting global growth and eventually lead to a US downturn anyway. So the point is people want to hedge, I think, their very strong profits they've made in equities and the significant downside risk there over the next couple of years. And yeah, it's expensive by historical standards, but I think it's got a lot more to go.
Max, thank you very much. Max Layton, Global Head of Commodities Research at Citi. Coming up on the programme, political uncertainty in France weighs on the country's economic outlook. We're going to be hearing from Valérie Pécresse, Paris Region President, live at the annual conference de Paris. That's taking place today. Francine Lacroix is there for us. This is Bloomberg.
First time, got to many times go visit with Steve Jobs to try to get an Apple box to be our box. And we were trying to merge boxes. And of course, they have Apple TV, we have our box. Never actually happened. And in one of the meetings, he said, well, you should give up because we're going to win that. But you should put Wi-Fi in all your boxes. And that's how you'll win. And you should be the best pipe. And he said the best dumb pipe. So I went home, went to our chief technology officer and said, what's Wi-Fi? And today we have the nation's biggest Wi-Fi network. And we have more customers. And 90% of your cell phone usage, 90% is Wi-Fi. Right. And that's because 70% of all the bits going over the internet right now are streaming. And streaming wasn't here 10 years ago. So I sit here and say the most exciting thing about our company is what's coming in the next 10 years that happens in innovation around the world, hopefully here in America, hopefully Silicon Valley and LA and everywhere else, Philadelphia, and that we're going to continue to have bits per home go up.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Welcome back to the opening trade. 42 minutes into a European session where sentiment seems to be fading just a little bit. We are certainly seeing some weakness coming through on the London market, down by 0.8% on the FTSE 100 today. Energy stocks in focus and moving lower. Now to the political uncertainty in France that has weighed on markets, certainly in yesterday's session. It's been weighing on the country's economic outlook as well. We've been talking a lot about the bond markets, of course. Lawmakers unanimously then adopting a stopgap budget That's intended to keep the state functioning through January. In the meantime, waiting to see whether the new Prime Minister can deliver a more permanent budget. This, as business leaders gather for the annual Conférence de Paris, that's aimed at fostering international trade. Let's go to Bloomberg's Francine Lacroix, who is there. Good morning, Fran.
Anna, good morning. Joining us now is Valérie Pécresse, the Paris region president. Of course, she's one of the most well-known politicians for a long time here in France. Madame Pécresse, thank you so much, as always, for joining us. You just got back from a big trip and speaking to investors in New York. I imagine they probably looked at you with wide eyes and saying, what's going on politically in France? How did you reassure them?
Yes, I went to New York to reassure some of our partners because, as you know, after Brexit, we had 6,000 jobs relocated in the financial sectors. And we want them to feel at home in France and to feel safe in front of political instability. And as you say, they asked me a lot about the French situation. And what I wanted to tell them is, first, of course, the fundamentals of the French economy are good, despite the instability. Second, we have safety net, institutional safety nets, which prevent us from having any shutdown, having any drama, economic drama in short term. And third, I'm sure that the government has in mind that we have to undertake structural reforms in order to get stronger and to face up with the challenges of the future.
It's early days, but what is the way forward for this country to be competitive, and how difficult will it be to find a budget? You've, in the past, put many budgets together.
Well, what I did in the region, when I was elected president of the region was nearly going bankrupt. We had a huge debt, we had deficits, we had infrastructures that were completely rotten, and we had to redo everything. But what I think is that France is very rich, so we have to put public spending efficiency at the core of our reflection. And that's the message I'm sending to the French government. It's in France, but it's also in Europe, because Europe and France have this tradition of over-regulating all the time. We have issued 3 times as much regulations as the American Congress in the past years. And we know that with Donald Trump in power, Elon Musk, after having the IRA, we're going to have another wave of deregulation in the United States. And we know that the Americans want to attract the talents of France because we are a huge talent pool. We are very much into AI, quantum, biotech, new space, new nuclear. We are the region in the world, one of the best regions for innovation in the world. And I'm afraid, of course, of these talents going to America if we cannot deregulate and help them innovate.
But Madame Pécresse, what does the Paris region need from the new government today? Do you worry that finance, global finance, be it American finance in France or even French finance, will move elsewhere if there's too much regulation and if there's not stability politically?
We have now a report, the Mario Draghi report, which gives all the ways of reforms, all the roads we have to take. So we know what we have to do. The problem is now that the engine, the French-German engine, has stopped. It has stopped because France has got political problems and Germany has got political problems. We have to solve these problems fast. In Germany, there will be general elections in February. In France, we have to find the ways of a stable government which enables public efficient, a reflection and an action on public efficiency.
How often were you asked by a lot of the American investors to explain the French Parliament to them? What was their number one question to you?
Well, first, we had a good news to tell them because we had a prime minister on Friday. So the beginning of my trip was more complicated than the end, because at the end we had a government, we had a prime minister. But I was telling them that nevertheless, the safety net, the institutional safety nets are very powerful. We have a very strong state. We succeeded in making extraordinary Olympic Games during the summer. We succeeded in rebuilding Notre Dame in 5 years. So when we want, we can, even if we don't have a government, because during the Games, we didn't have any government. But the political crisis is still very bothering because it prevents us from doing structural reforms that we need. And I will go on advocating for these structural reforms. But what I told my interlocutors is that in Ile-de-France, there is also a pool of stability because local governments account for 80% of French investment. So in the local government of Ile-de-France, which accounts for 1/3 of French GDP, we are stable until 28. It's under my government. We are pro-business. We are technophile. We want to help enterprises, and we are still building a super metro. We're still working a lot on the environment of the firms we host, and we hope they're still very happy here.
Madame Pécresse, the latest GDP projections actually show that the effect of the Paris Olympics are very short-lived. Are you disappointed with that? Is that actually...
No, they're not. It's deeper than that. We expect an extraordinary touristic season next summer. We expect that all the incentive trips in America will be in Paris because Paris showed itself at the best. So we think there will be a long-lasting effect.
And Emily in Paris. Is that is that actually the best advertisement that you could have?
The best advertisement is the beauty of the city and the surroundings, and that's what I'm working hard on.
I mean, how difficult is it to lobby Emily in Paris to stay in Paris and not in Rome?
Well, no. Paris speaks for itself.
Valérie Pécresse, thank you so much for joining us. That was, of course, Madame Pécresse, the Paris region president. With that, I'm going to send it back to you, Kriti, and then we'll have plenty more from the Conférence de Paris throughout the day.
Bloomberg's Francine Lacqua there with that exclusive interview. We really appreciate it. Let's stick with the conversation in Paris and go to the Bank of France, which has cut its domestic growth outlook for next year due to the country's political turmoil affecting household and business confidence. Bloomberg's Phil Serafino joins us from Paris. He's all over the story. Phil, walk us through this cut to the growth outlook. Where did it go wrong for them?
You know, the Bank of France is saying that the political uncertainty is really weighing on investment and consumer spending. You can imagine if you were a business owner and you're deciding whether to hire people, you might hold back, given that you don't know what the tax situation is going to look like next year. You don't know what government spending is going to look like next year. So, you know, the Bank of France has dialed back its growth expectations, both for 2025 and 2026. You know, 0.9% growth. That's not enough. France needs a really growing economy to help it get out of this deficit hole that it's in.
Yeah, absolutely. We've talked about that many times, haven't we? And Phil, talking about the deficit hole, many politicians have been trying to fix that, but it's proved difficult, as we have chronicled. What challenges does the new Prime Minister Bayrou have ahead of him then? We understand he's been talking to Le Pen, she feels listened to, he's been talking to the socialists, a lot of conversation happening, but what are the challenges that now exist?
Well, the big challenge is the sort of jigsaw puzzle that is the French Parliament. No one has a majority, and you have some very different political views there. The far left has a big bloc. Marine Le Pen's far right has a big bloc. Bayrou needs to come up with first a government and then a budget that can keep all those people happy. And I mean, the big challenge really is there are no easy answers. The governor of the Bank of France, François Villeroy de Galhau, in putting out this economic report last night, he's out doing the media, and he's giving a message that politicians really don't want to hear. I mean, his point is France is spending too much money, and you know, France spends about 57% of GDP on its government. The average in the Eurozone is around 48%. And he says, you know, that's great. France has wonderful government services, but we have to cut that back, and we have to raise taxes a little bit. So that's the challenge for Bayrou, how to do those things, neither of which would be very popular.
So, Phil, the great thing about you is you get to cover a little bit of politics and a little bit of the markets as well. So marry the two for us here, simply because we've been talking about this underperformance of the CAC 40. I want to say for at least 6 months now, since those snap elections back over the summer. When does France catch up? What does the equity market investor need to see from France to say, all right, we're gonna reinvest in this index?
one problem the French stock market has is, I guess this might be a good problem to have, it's very international. There's a big chunk of the CAC 40 companies that don't depend on France. You have companies like LVMH, Airbus, they are global companies. But the problem for them is outside of France in many ways. China still not growing very well, struggling to stimulate the economy. And then there's the prospect of tariffs from the US. So it would be great for the French stock market if France got its budget situation under control and the politics were stable. But there's a whole lot of outside forces out there, too, that are sort of weighing down this stock market.
Phil, thank you very much. Phil Serafino bringing us the latest from Paris, Kriti, on both the economic story and indeed on the politics.
And in the meantime, we go to some news out of Russia as well. Igor Kirilov, the head of Russia's radiological, chemical, and biological defense troops, was killed in a bomb explosion in Moscow earlier today in what appeared to be a rare assassination of a top military official in the country. A source tells Bloomberg that Ukraine was behind the killing, and it comes one day after Ukraine's SBU security service had accused him in absentia with ordering the, quote, massive use of banned chemical weapons against Ukrainian troops in the country's east and south, something we'll be monitoring very, very closely.
Yeah, absolutely. All of this in the context of what we know President-elect thinks of this ongoing conflict, and he's reiterated his urging of Zelensky to prepare to make a deal to end the war. So we'll watch that with interest, of course, as we head towards January and beyond. Let's get back to what is happening here and now. And in terms of the data releases, we're expecting a couple of key data releases from Germany this morning. 9 a.m. and 10 a.m. we'll get the IFO and we'll get the ZEW out of Germany. So both of those data prints will be important, given we're watching the politics, how that develops. Looks as if it could be quite a while, Kriti, until we get any kind of government in Germany, even when we get the results of the election. Of course, coalition building, if that's what it takes, often takes a while. 1:30 p.m. UK time, we'll get US retail sales, and we also get Canadian CPI, which stands out, of course, because we've got a lot of politics in Canada playing out. Yet another jurisdiction where we've seen the election, once again, of President Trump having an impact on domestic politics.
Yeah, and the Canadian makeup is really interesting because, one, they're extremely exposed to the commodity story, which we were just talking about with Max Clayton as well. They're also exposed to the housing story. So if you see the inflationary issues in the United States, you're going to see it reflected in Canada as well. But really for Europe, it's what's happening in 5 minutes, as you mentioned, this idea that we're going to get the German economic data at a time, by the way, when the euro dollar is at a 104 handle. We're spiraling to parity so quickly, and I'm not really sure anything can rescue it.
I mean, I suppose quickly. Yeah, I mean, I feel like it's been at 105 for quite a while, but maybe a deeper dive into the charts would prove I'm wrong there. But 104, as you say, and 92 is where we trade right now. So we're waiting for this IFO number. That's the one that comes first, and then we get the ZEW. In terms of the IFO, those business expectations are going to be key, and we are expecting them to kind of stay where they've been. 87.5 is the expectation there, Kriti. So not expecting to see a big uptick in sentiment, as I suppose you would expect in a country that is now confirmed to be going to the polls at the start of next year.
And I think it's also fascinating here because it's coming at a time where we're also talking about the debt brake and the removal of the debt brake. And it's something that we were talking with Pooja Kumar as well, where this kind of potential for investment that these surveys are indicating is very, very badly needed is something that the debt market isn't actually factoring in.
Yeah, or at least the reform of the debt brake. Yeah. And we keep getting these messages. Do they conflict, or are they quite nuanced from the CDU, CSU about their willingness to tackle that debt brake? Maybe just to reform it rather than scrap it seemed to be the latest news flow. But we are going to be hearing from them a little bit later on. So we'll hear from the right of German politics. We'll also hear from the SPD, I think, as well, also giving their platform for the next election. We will be live in Paris. We just were in Paris with Francine, and we will be live again there later on today. The annual Conférence de Paris continues, including interviews with the Emeritus Chairman of Publicis Group, Maurice Lévy, who will be joining the team on the ground there, as well as the BHP CEO, Mike Henry. That is it for the opening train. The Pulse is up next. Have a good day, everybody. This is Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua, the Conférence de Paris, which brings together leaders from business, share their knowledge on ways to overcome the biggest global challenges. And here are our top stories. A top Russian general is killed in a bomb explosion in Moscow. A source tells Bloomberg Ukraine was responsible. China reportedly plans to set an annual growth goal of about 5% for next year and raise the budget deficit to 4% of GDP, days after top leaders wrap up a yearly economic conference. Plus, we talked to Mike Henry, the chief executive of mining giant BHP, on the energy transition and booming demand for copper. Now, also on the program, a big focus, of course, on the economic impact of the political turmoil in France and Germany. Very shortly, we'll be speaking to the president of Germany's IFO Institute, and then later we'll be joined exclusively here in Paris by Maurice Lévy, the chairman emeritus of Publicis Group. Now, first thing is first, let's take a look at the European markets map. Now, we're inching closer to, of course, the big thing that I've been waiting for the last 8 weeks, and that is the Federal Reserve decision. Now, stocks were trading across most regions. Again, traders await the Federal Reserve final interest rate decision for 2024 and its monetary policy forecast. A couple of things we need to watch out for. U.S. stocks on course to outperform their global peers by a wide margin this year. Now, this goes back to the idea of American exceptionalism, and there's also quite a lot of optimism about the impact of artificial intelligence. So let's go straight to cross assets. We're looking for the Fed Chair Jay Powell, of course, widely expected to announce a further 25 basis point of easing on Wednesday. The path of the following months, frankly, is less clear, and that's because of the Trump trade and also the fact that we have Inauguration Day, January 20th. Now, the other news we're watching out for is Germany. So we have the IFO Institute coming out shortly, but Germany is also going to cut the federal debt sales by 13% to about 380 billion euros. Remember, deficit, but also asset sales is one of the big things that we're watching out for here on Bloomberg TV to try and look forward to what it means for budget deficits. But also remember, the big question mark in the market is whether there could be an ugly auction, be it in the UK Germany, or even the US. Now, that IFO Institute for December business confidence coming in pretty much as expected, maybe a touch lower, 84.7. The estimate was 85.5. So to talk about the German economy, we're now joined by Clemens Fuest. He's president at the IFO Institute. Mr. Fuest, thank you for joining us. There are many, many concerns about Germany going forward. Is it now the sick man of Europe?
It looks like it. It's this weakness in the German economy is becoming chronic. The German economy is not in a slump, so it's not going down very quickly. It's not a classical crisis, but it's stagnating. It's been stagnating for a long time, and that's what we see. What we see again in the data. And the focus of this stagnation is really manufacturing, where things are just not getting better.
So, Mr. Fuest, first of all, is there anything structural that Germany can address after the next elections?
This is clearly a structural crisis, and it has to do with the manufacturing sector in particular. There are two areas of concern: the automotive industry struggling with the transition towards electric mobility and increasing relevance of IT. And then there is the energy-intensive sector, the chemical industry, the metal industry, suffering from high energy prices and a lot of uncertainty about the future of energy supply in Germany. Germany is pursuing a very narrow energy policy, focusing entirely on renewables, and that does create a lot of uncertainty. So it's these structural issues. And then, of course, this broader question, how will Germany cope with demographic change, declining workforce? We already see this in the structure of the economy and the labor market, with health and care expanding and manufacturing declining.
How much do you worry about the labor market? So there's a concern that then Germany is on the brink of big layoffs, and that this could come soon quite quickly, leading to a kind of spiral.
There are concerns about employment in manufacturing. That has been declining for some time, and now increasingly large companies are announcing layoff. At the same time, the labor market is stabilized by the public sector, because we've seen a public sector build up for a long time, that the public sector is expanding, and here it is the health sector and the care sector where more and more people are employed as a result of an aging population that needs more health care. So the overall labor market is stabilized by the fact that demographic change reduces the size of the workforce. The trouble is wages are stagnating or declining because the structural change towards the service industry is associated with lower productivity.
What can you tell us about what you would put as priority in the snap election? So what can the next government do to make things a little bit better? What would you do as priorities if you were in charge?
I think the next government needs to prioritize economic growth, and within that, it needs to prioritize labor supply, investment, and innovation, these three areas. So create better conditions for labor supply. We see work hours declining in Germany, and that's because of problems in the tax and transfer system, because of a lack of childcare. We see investors fleeing because Germany has the highest corporate tax rate in the G7. It has too much bureaucratic burden. It has problematic regulations. The government needs to address that. And then we need to revitalize innovation, do more for the creation of new companies, because automotive and energy-intensive industries are declining. We urgently need new ideas and new companies. And there are opportunities. There are new companies, but they face difficulties growing due to a lack of capital for new companies. So we need to change these things. And if we do that, Germany can grow again.
How important, Mr. Fuest, how important is it to get rid of, the debt brake, or to change it? We know that this current chancellor was saying, look, we need to do something to spend in terms of infrastructure and defense. So will growth only come with extra government spending first?
I think the debt brake is, in a way, a scapegoat, but not the cause of our difficulties. The public sector deficit is 2%, so there are many ways of getting around the debt brake, and that has been utilized. It's not like the government is not running deficits. I think what we need to do first is come up with a meaningful growth agenda, and then we can discuss how we finance it. There are enough possibilities to get into financing through public companies, so the debt brake isn't really our problem.
The Bundesbank, I think, says that because of the Trump tariffs, economic output will be hit between 1.3 and 1.4%. Does that seem reasonable in terms of estimates to you?
I think it's maybe a bit early to say that, because whether Trump will really come up with these tariffs is unclear. We maybe tend to forget that Trump also wants to increase the deficit in the U.S., get rid of bureaucracy, cut taxes, and that may increase imports to the U.S. And compensate for the tariffs maybe. So I think what Trump does create is a lot of uncertainty, but how that will play out is unclear.
Clemens Fuß, thank you so much for joining us. That was the president at the IFO Institute. Now let's get on to China. And Chinese leaders plan to raise the budget deficit to 4% of GDP and set an annual growth goal of about 5% next year. That's according to a report today. Now for more, let's get straight to Bloomberg's James Mager in Beijing. James, thank you for joining us. So what do you make of the China reportedly planning to raise its deficit to the highest on record?
I think what's important is that you're seeing the growth target has been kept about the same, so about 5%. But the government is saying they're going to have to spend a lot more money to achieve that. I don't think the 4% number is really what's material here. There's a lot of stuff that's left out of that number, a lot of bond sales and a lot of other spending that's not actually included in that sort of headline deficit. And if you include all that, it's probably closer to 8 to 10%. But what we're seeing, what these numbers are showing, is kind of confirming what we saw in the Central Economic Work Conference last week, that the government is saying they still want the economy to grow, they want people to spend more, but really the central government in Beijing is going to have to step up and spend a lot more to achieve that 5% target. They're on track for this year, at least in the headline number, and they're saying they want to achieve that again, but Beijing is saying they're going to spend a lot more money to do that.
James, thanks so much. James Mager there in Beijing. Now, coming up, we'll have plenty more, of course, on our top stories. Also, a top Russian general was killed in a bomb explosion in Moscow in what appears to be a rare assassination of a top military official in the country. So we'll have the details next. And this is Bloomberg. From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Well, Ukraine has claimed responsibility for the assassination of the head of Russia's radiological, chemical, and biological defense troops in a bomb explosion in Moscow. Now, that's according to a person familiar with the matter. For more on all of this, let's get straight to Ross Matheson, our EMEA news director. Ross, I mean, this feels like a very big deal. It's also a new strategy by Ukraine to target these generals inside Russia. What's the way forward?
Well, it's interesting to see this development inside the heart of Russia, because what we've really seen so far from Ukraine, obviously, is stepped up attacks inside Russian soil, but mostly confined to those border areas between Russia and Ukraine in the far reaches of Russia. We've seen drone attacks, obviously, on Moscow itself, but the targeting of a senior Russian military figure, the Lieutenant General, as you're saying, of the biological and chemical weapons defense forces inside Russia, as the source is telling us, happened, is perhaps a new development, because it really does bring this war again to the heart of Moscow. You can see these attacks on the border areas. You know, they're obviously an embarrassment to some extent for Vladimir Putin, the Russian president, but they're a bit easy to dismiss if you're inside Moscow itself, because it's a very long way away. If you have these very visible attacks occurring inside Moscow, it's a bit harder to dismiss or to brush off. And is this the start of more of what we call a decapitation strategy, which is coming directly for senior figures in the Russian leadership, the Russian military leadership inside Russia itself?
Ross, how big of a blow is it for Vladimir Putin?
Well, it is embarrassing for him. I mean, this Lieutenant General commanded these forces, and only yesterday, I believe, Ukraine charged him in absentia for what it says was the use of chemical weapons inside Ukraine in this conflict. He's not essential to Russia's war machinery. This will not change the trajectory of the war inside Ukraine, or the sense we're heading towards a point, especially with the US changing the administration into Donald Trump, that we're coming towards a negotiation. But it is visibly embarrassing for Vladimir Putin, who is all about the veneer of showing he's totally in control at home. And we've had a series of these things. Of course, we also had that attack at a concert venue earlier this year where more than 100 people were killed, and that was claimed by Islamic State. So the fact that these actors, be it Ukraine, be it other entities, be it Islamic State, can reach into Moscow and do this very visibly is obviously embarrassing for Vladimir Putin.
Ross, thanks so much. Ross Matheson there, Bloomberg's EMEA news director. Now, coming up, we're, of course, here live from the Conférence de Paris. We'll be speaking exclusively to Maurice Lévy, the chairman emeritus at Publicis, about France's political crisis and the impact on the economy. That's next, and this is Bloomberg.
Fixed Income Fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the...
Well, French lawmakers unanimously adopted a stopgap budget bill intended to enable the state to keep functioning from January. This, of course, comes as the country's central bank also cut its domestic growth outlook, citing the political upheaval. Now, let's discuss the impact of France's political crisis with Maurice Lévy, Chairman Emeritus of Publicis, who joins me exclusively at the Conférence de Paris. Monsieur Lévy, thank you for joining us. I mean, you understand French politics more than anyone in business. You've, for many years, of course, advised all the most important chief executives in the world and France. What do they need now from the new government?
They need some very clear decision and a little bit of vision. What happened recently with the departure of Michel Garnier is a shame because he was really taking the right direction. And we do hope that the new government of François Bayrou will last a little bit longer and that he will be in a position to make some strong decisions. What we do need is a clear direction. Emmanuel Macron has been able to make France more attractive to foreign investment with not only Choose France, but a lot of decision around Choose France. And we may have some difficulties if we don't give some very strong signals to the international community of investors.
This seems near impossible if you have a parliament that's split three ways and you have a prime minister that kind of has to cobble together a budget. What would you put in the budget to give chief executives the assurance that they need? Is it deregulation? Is it growth plan? Is it something else?
As you said, it will be the most impossible to get a common platform. Almost impossible because there is the far left, the far right, and there is the center who has no majority. So no one can have the majority without making an agreement with one of the extreme parties. Therefore, we can't expect to have strong decision made. We can't expect to have some strong cuts. And I'm afraid that what we will see more than what we would love to see is a raise on taxes. This is very unfortunate because the last thing that France needs is to raise taxes. And as it will be almost impossible to find a common platform for the three large groups, I believe that we will be in a stalemate for a short while. When I say a short while, I'm afraid until the end of the mandate of Emmanuel Macron.
So you've been in the advertising industry forever. I mean, there's now a mega merger. Omnicom buying IPG for a huge vast of money. Does it make sense for advertising to consolidate even further? Is bigger always better?
For the people who are a little bit old, like myself, this is déjà vu, because there was a Publicis Omnicom Group merger, which has been agreed upon in 2013 and has not been able to get done for a lot of reasons. I think it was a great idea at that time because scale was of the utmost importance. Today, with the development of AI, with the development of a lot of technology tools, this makes less sense. But I believe that this kind of behemoth may have some negative impact in terms of employment. We will see a lot of layoffs. They have forecasted to have $750 million US dollars in synergies. If that passes and if the authorization are given and all of the hurdles are passed, I believe that it will be a formidable competitor. And that is something which is exciting us a lot.
I mean, the other exciting thing, or the biggest thing to navigate for a French or European CEO is the arrival of Donald Trump and what that means for tariffs in practically every industry. You've met Donald Trump in Davos many years ago. I mean, what's the right strategy in trying to either Trump-proof an economy or actually do something so that the company doesn't get hit?
He wrote a book about deal making. He is a deal maker. And we have to find the right deal with him. We have to find the way to give and take. I give you that, I take this. And if we are not coming with something positive and trying to find the right balance, we know what he's expecting. He is expecting to make America great again. This means more employment. This means more jobs. This means also less imbalance in trade balance. And this will be tough for China, and it will be difficult for EU. We need to have a more coherent EU, which will be a bit difficult because you have the collapse of the government in Germany yesterday. You have the difficulties of the current government in France. And you have at least 3 or 4 different ways of thinking in Europe. So therefore, without the tandem, the couple, the German and French couple, it's very difficult to get Europe moving. So I hope that we'll find ways, but I'm not very optimistic.
Okay, Moise Levy, thank you so much. You'll have to come back on to talk to us about strategy and why you're not so optimistic going forward. The Chairman Emeritus of Publicis Group. Coming up, we'll have plenty more, of course, from the Conférence de Paris. We'll look ahead to a lot of central bank decisions coming this week, starting with the Fed tomorrow. And then we also speak exclusively to the Chief Executive Officer of BHP, Mike Henry. That's shortly, and this is Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions, has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. players are a pass-through entity. They're not getting any equity build in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Paris, and these are your top stories. We start in Russia. A top Russian general is killed in a bomb explosion in Moscow. A source tells Bloomberg Ukraine was responsible. China reportedly plans to set an annual growth goal of about 5% for the next year and raise a budget deficit to 4% of GDP days after top leaders wrap up a yearly economic conference. Plus, we talked to Mike Henry, the chief executive of mining giant BHP, on the energy transition and booming demand for copper. But first thing is first, traders, of course, gearing up for interest rates decisions from several of the world's most important central banks over the next few days. Now, the Fed, widely expected to deliver a quarter-point rate cut tomorrow. Joining us now is Ursula Marchionni, BlackRock's managing director and head of EMEA investment at Portfolio Solutions. Ursula, as always, thank you so much for coming on. I'm sorry I'm in Paris and you're in London today, but all eyes on the Fed. The concern is what happens after the rate cut. So how much visibility do you have on the path forward?
Good morning, Francine. Thank you for having me. So yes, I think a theme in terms of forward-looking paths for central banks, and to your point, there's so much in Santa's bag for us this week, is a theme of divergence. So if we look at the ECB action last week and then going into 2025, 5 cuts expected towards a terminal rate for the year between 1.5 and 2. Then move to the Fed tomorrow, to your point, expected cut, and then moving into 2025, 3 more being priced in now towards a terminal rate between 3.5 and 3.75. So again, you can see the difference across the two paths becoming more extreme and then translating into investors' behaviors and choices.
Ursula, how difficult will it be for the Fed to set a rate path, given all of the unknowns with the Trump presidency, trade, tariffs, and the art of the deal that we're not sure what it looks like?
Yeah, it's a very good question, and it goes back to the new regime we all invest in now, having greater uncertainty. But taking a step back, if I look into tomorrow, I feel it's reasonable to expect Chair Powell to have a more hawkish tone, pointing towards more solid growth of the economy, stabilization of the labor market, and on the inflation front, I very much see a first leg of inflation reduction having completed relatively smoothly. The next leg will probably be more complex to achieve. And so for the Fed, buying optionalities and actually being cautious around both the uncertainty that you point towards in terms of policies, but also, the broader set of data that we'll continue to see is important. Now, going back to that divergence, Francine, what I find really interesting is that, it doesn't quite seem to change in any material form the big theme that we all continue to debate, discuss, some hate, US exceptionalism. And so if I look at November data, if I look at month-to-date data, that continues to come through. And so we have this element around central bank paths and markets continuing on a very set front.
But Ursula, and I understand, and of course everything you go through is through the ETF lens, but it's really quite incredible when you look at equities. It's all about U.S. exceptionalism, but then a lot of these equities are priced to perfection. So is there a turning point in 2025, and where do investors deploy cash then?
Yes, that is the key question. And I think you're right in terms of the horizon that we're looking at for the trade is the key determinant here. So tactical versus more strategic, short-term versus longer-term. If I look at where investors are moving their money, again, November, we saw $205 billion flowing into the ETP industry. Of that, 73% went into U.S. equities. So, not just in equities, in U.S. equities, through large cap, but also small cap, mid-cap financials. So big cyclical vote of confidence, and December month today is very much a continuation of that. So in the immediate term, Francine, I think it's difficult to see a big exogenous factor that unsettles that path. Going forward, that is where the discussion becomes interesting, particularly for investors, for our clients in Europe, where home biases towards our region are part of the benchmark. And so again, European exposure is important. Right. And so looking at this year, there's like loads of interesting points. Look at the IBEX, the DAX performance versus the S&P 500 equal weighted actually being better. Look at certain sectors such as luxury. So again, there's a lot there to be said in terms of opportunities to differentiate and select through active investment. To your point, ETP flows are only a part of the industry. They're useful to give a sense of where the market is going, but there's a broader opportunity set that I believe investors should embrace.
So, Ursula, I mean, for me, I'm thinking of fixed income, so I don't know what you do there. But also, if you're outside the U.S., where do you want to be selective? What's the good entry point, for example, for some of the luxury or healthcare stocks in Europe?
Yes. So again, I think in terms of the entry point and the horizon of the trade, luxury is a good opportunity at present when put in the context of portfolio diversification and a completion strategy towards that U.S. exceptionalism that we mentioned. Fixed income is another very interesting space. We're on record for we're on track for a record year in terms of fixed income ETPs. So there's definitely a lot happening there. Going back to the central bank divergence path, very different opportunities across the pond. So in the US, given the path ahead, belly of the curve, potentially short term, although there's more volatility there, appear interesting and in favor with investors. Europe is different. I see a lot of my clients having appetite for duration, and the discussion then, Francine, is very much against the politics backdrop we saw yesterday. No confidence vote for the German government. It's how to play a more benign approach towards duration, how to onboard it. And so here we have seen, particularly this month, OATs recording outflows, so the sentiment, the jitters around the political situation are taking a toll. Bonds have done really well, both in terms of flows. We've seen a year-to-date rally. And so moving forward, I'm hearing more desire to think about how to enter European durations in a differentiated manner. So think about BTPs or bonos, where maybe valuations aren't as attractive as they used to be, but certainly volatility is lower.
Right. Ursula, thank you so much for joining us. Ursula Marchioni there, BlackRock's Managing Director, ahead of EMEA Investment and Portfolio Solutions. Thank you. Now, coming up, BHP digging into growth with copper at the core of its future plans. The company's Chief Executive, Mike Henry, joins us here at the Conférence de Paris. This is Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Politics to the world of business. Joe Matthew and Kaylee Lyons deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Welcome back, everyone. Now, soaring demand for copper and the energy transition will require some $250 billion of investments over the next decade, helping to drive further mergers in the industry. Now, that's the view of BHP Chief Executive Mike Henry, who says companies will need scale, strong balance sheets, and technical capabilities if they're to emerge as winners over the coming decades. Well, I'm delighted to be joined by Mike Henry himself, joining us now. Mike, you see, I start with your quote because you're kind of like the linchpin of exactly what needs to get the job done.
Yeah.
How do you see growth in your industry, and how worried are you about global demand?
So I'll start by saying BHP is a long-term company. If you look at the long-term trajectory for metals and minerals demand, it's very positive. Growing global population, 8 billion today to 10 billion in 2050. More urbanization, so more people living in cities, which tends to be more metals and minerals intensive. Rising living standards, the energy transition, AI. All of these things require more metals and minerals, so the long-term trajectory for metals demand is quite strong. And BHP is positioned at the forefront of that to meet the world's need for critical minerals.
Mike, I mean, there's, of course, a number of some of these minerals that most people can't pronounce, lithium and then copper. Why have you gone for copper as a really thing that actually is needed more than anything else for the transition to work?
So copper demand is ubiquitous. If you think about the number of uses of copper, be it the phones that we carry around in our pockets, to televisions, air conditioners, wind turbines, electric vehicles, it's pervasive in the economy. And so we see that demand growing strongly over time. One of the other things that we love about copper is that it has a steep cost curve. So the cost of producing it from one asset can be a lot more economic than producing it from another asset. So if you've got your hands on the right assets, you can generate really healthy margins. BHP is already the world's #1 or #2 copper producer. We have the world's largest endowment of copper resources, and we have big growth prospects now in Australia, the US, Chile, and more recently in Argentina. So we're positioned quite strongly in this quantity that the world's going to need so much more of.
I mean, do you want more through M&A?
So M&A is one lever in our arsenal of potential avenues of growth. We're already very well set in terms of our existing business, existing resources, and the growth options that we have. And no M&A deal is ever a must-do for us. But where there's an opportunity for us to unlock greater shareholder value through it, it's something that we've shown ourselves as willing to consider. But again, plan A for us is develop more of the resources that we have and these fantastic growth options that we've already developed inside the company.
So what does M&A depend on? Is it price, or is it actually strategic fit, or is it political, blessing?
It has to be on strategy for BHP, so it's in the commodities that we've chosen to be in. It has to be of asset quality that is in line with the assets that we want, which are large, long life, low cost. And there has to be opportunity to unlock more value for shareholders through BHP's ownership. And so
Yeah.
Those opportunities are few and far between.
I was going to say there's just not much around that fits that criteria.
Yes, which is why we focus on making sure that the opportunities we have inside the company are so strong, and that's really what we rely upon is this pipeline of organic options that we've developed.
Mike, when you look at, of course, the inauguration of Donald Trump, I mean, we're expecting policies to be pretty much in place. What does that mean for China? What does that mean for your industry in general?
So it's still a bit early to tell. I think for our industry, over the long term, we expect growing demand for key commodities to continue unabated. However, in the near term or along that path, there is going to be a degree of uncertainty related to trade flows, tariffs, industrial policy, and so on, which are something that we keep a very close eye on. Specifically in respect of the incoming administration, we know that there's strong support for mining, strong understanding of the need for security of critical mineral supply chains. Exactly how that plays out in practice and policy, yet to be determined. There has been bipartisan support in the U.S. for more mining in the U.S., permitting reform, and we expect that to continue and to be a strong area of focus for the new administration.
But does that change actually the way you'll run BHP?
So BHP's strategy is one that is very long-term, focused on the global level. The U.S. isn't currently a big market for BHP. It's about 3%, 4% of our revenues. But of course, the U.S. plays a key role in determining policies that apply to the industry globally. So it's something that we stay very close to. Our strategy is one of positioning ourselves in the right commodities, large assets that we can expand over time, specific focus on copper, potash. We've got a big development underway in Canada. Iron ore, we have the world's lowest cost, best performing iron ore business, and in a subset of only the best quality coals for steel making. The other thing I would note is that BHP's production is almost exclusively from countries that have free trade agreements in place with the U.S. currently: Australia, Chile, and Canada.
What does a Trump presidency mean for the energy transition? Does it actually slow it down? And so does it mean that everything is a little bit slower, even access to these critical minerals, that you have a bit more time?
So it's a really interesting question, and I don't think this applies just to the U.S. If you look at governments around the world these days, they're facing competing pressures. I think there's a broad understanding of the need for the long-term need for the energy transition, but at the same time, policymakers are needing to deal with cost of living pressures, resurgence of industrial policy, trade protectionism, all of these factors coming to bear, and how governments then weigh up and balance between those factors in the short term, of course, is a key consideration, but I don't think it detracts from the long-term trajectory of the world achieving the energy transition. That energy transition is going to be metals and minerals intensive, which is going to compound demand for certain commodities, off an already strong baseline as the world's population grows, urbanization continues to play out, and as billions of people around the world chase increased living standards akin to those that we enjoy.
What can shareholders expect in terms of dividends and buyback?
So BHP has a very clear capital allocation framework. It's something that we put in place back in 2016. We've been consistent in execution of it. So one of the things that BHP is known for is our very simple strategy and our very consistent execution against that strategy. We made great progress in recent years. Operationally, the company is performing very well. We've returned significant cash dividends to shareholders. In fact, we were the largest cash dividend payer in the world in any sector for a couple of years running. We remain one of the highest. And so this capital allocation framework that we have in place, coupled with the very clear growth prospects that we have in potash, copper, the high-performing iron ore business that we have, bode well for long-term shareholder returns.
Mike, I have a couple of things. BHP has previously stated the same work, same pay laws. I mean, that means that there's like 800 million of unexpected costs that come from that. What does it mean for can you mitigate that, or what's the way forward?
So we have to continue to drive forward on productivity. In the end, productivity is everything, and it's one of the key points that we make to policymakers in Australia and elsewhere, is that what countries need to focus on is getting the fundamental policy settings in place that support global competitiveness. Now, in respect of that specific policy, we believe that it brings with it higher costs for no improvement in productivity. We're very big supporters of wage increases that are accompanied by productivity increases. In that case, that isn't, the wage increase wouldn't be accompanied by productivity improvement, so it would pull us backwards on the competitiveness front. We have to work very hard to continue to improve productivity through other means to offset that increased cost. And the costs are still a little bit, we have to see exactly how the policy gets implemented, but it will mean more costs. And we're offsetting that through our application of technology and through improving work practices through other means. And we have a proprietary system in place called the BHP operating system, which is our way of working inside the company. And that's what's helped move us from not being the best performer in the industry operationally to now having the best performing iron ore business in the world, lowest cost for 5 years running now. And we'll continue our focus on that and how we go about enabling the 90,000 people who work across BHP.
The productivity puzzle is one of the most important and difficult questions that any chief executive can ask themselves. Does AI help even at BHP in this regard?
So we've been using AI now for a few years, and it is helping with everything from how we go about finding resources, how we go about extracting them, the efficiency with which we're able to mine and then process these resources and get them to market. And the exciting thing is, I don't think we yet know what the full potential of AI is. It's not the sole focus. It's at the end of the day, it's an enabler of the underlying business and the way that people work. But yes, it's already unlocking value for BHP, and there's lots more to come.
Mike, I know there's a UK governance law that basically suggests that a chair steps down after 9 years. What does that mean for your chairman?
Oh, so it's probably a question better for the chair. But one of the things that BHP is known for and has done a very good job of in the past is our approach to succession. But I know that certainly from my perspective, the company's performing well. There's still so much more opportunity ahead for BHP, and I can say that both the board and the management team are very much focused on running the great business that we have and unlocking more of that opportunity for shareholders and other stakeholders in the coming years.
Your biggest challenge for next year?
So just one
Not
challenge
one, right?
for next year. Of course, safety is always front of mind. In an industry like ours, looking after our people is priority number one. My management team and I spend a lot of time out there in the field talking to people, making sure that we understand what their challenges are and how we can go about better enabling them. Of course, there's all the uncertainty around trade measures and so on in the year ahead. It creates some near-term uncertainty, but the long-term outlook for our industry, for BHP as a company, and for the commodities that we produce is positive. And I'm focused on how we go about positioning BHP to best capitalize on those opportunities in the years ahead.
Mike, thank you so much for joining us today. That was, of course, Mike Henry, the Chief Executive of BHP. Now, coming up, we'll have plenty more, of course, on the rapid rise of weight loss drug maker Novo Nordisk. We spoke to the Chief Executive a couple of weeks ago. It's hit small businesses in Denmark because of hiring. So we'll have plenty more on that story next. And this is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
There
is this real momentum from Wall Street?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Welcome back. In Denmark, Novo Nordisk's rapid hiring spree is making it difficult, very difficult, for small businesses to find staff, leading some to close down. Now, for more on all of this, let's bring in Bloomberg's Sanne Vass in Copenhagen. Sanne, so Novo Nordisk is the #1 driver of GDP and job growth in Denmark. Tell us more about the fight for talent in Denmark.
Yeah, so Danish economy is doing well. Employment is at record high, thanks to Novo Nordisk. And of course, that's very positive for Denmark as a whole, but it's just not all that are feeling these benefits. So for your background, Denmark is a small country. We're about 6 million people. And Novo Nordisk is on such a rapid hiring spree at the moment that it's vacuuming the labor market for everything it can get. And for businesses, especially in those areas where Novo is present and growing, that's really causing a lot of challenges, especially because Novo comes in with attractive salaries and attractive pay, and a lot of people want to go and work there. Other businesses, they struggle to recruit as well, and they're really starting to feel this pain of not being able to find the labor.
But Sanne, what are the consequences for businesses and for the Danish economy?
Well, it means that they're just not able to grow as much as they would have been if they could get the staff that they needed. So we hear of businesses that are having to decline orders. Some are delaying expansion projects because the construction companies don't have enough staff. I've also spoken to a company that decided to move production abroad because that was the only way out, as he saw it. And another company, a car repair shop, that was just a half a mile down from Novo Nordisk in Kalundborg, decided that he was just too exhausted from having to look for staff all the time. So he closed down his shop. So of course it's an issue for those businesses and their growth, but for the Danish economy as a whole, it's really kind of sorry, am I still on?
Yes, Sanne. I mean, it's obviously one of the biggest challenges going forward. Sanne, thank you so much. I urge everyone to go on our website and read Sanne's story from Copenhagen. Plenty more to come. From the Conférence de Paris, we speak with the L'Oréal chief executive. This is Bloomberg.
How do we reach down to the 18 to 35-year-old market?
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
That gets to the concern over the auctions. If you don't have these stable buyers, the buyers now are more price sensitive. Yep. What does that mean if you have expanding fiscal deficits and less people willing to absorb it?
And of course, central banks have been buyers of gold, net buyers of gold. Look, we've talked about the exuberance of these markets. It's the most overused word. But there is one chart that personifies it. 7 days of the Nasdaq 100. Let's have a look at it. You can see here, Danny, we are just powering ahead, back-to-back gains, 3 record highs in the past 4 sessions. Mark Haferly is the CIO for UBS Global Wealth Management. Mark, good morning to you. Bank of America's survey is super bullish. Goldman's have burgeoning optimism. You have confidence in this call of yours at 6,600. How comfortable are you with that? Or what superlative would you grab for this morning? How are you?
I'm doing well. And yeah, we certainly see in our base case the chance that the roaring 20s that we've had so far, the first 5 years of the decade, continue into next year. But, you know, have to be mindful of the risks when the tweets start flying in January. And of course, we've got our eye on a few things like tariffs and trade policy as we gear up for the Trump administration.
Mark, is this a very different market then in 2025? One that used to be based on central banks and economy is now dominated by the politics. Is that what you're saying as to what will drive risk in the next 4 years?
Well, we certainly hope not, in the sense that, you know, we still see the Fed cutting rates next year. We still see consumer spending strong because real wages have risen, and that is a great setup. But we know that there are risks. We know that there will be more tariffs. And so really it is, you know, how much of the uncertainty that could be driven by a change in trade policy or tariffs will be balanced by the fundamental strength of the U.S. economy and also some of the potential good things that could come out of a Trump administration for the market, like deregulation.
And that's certainly one of Scott Besant's threes, isn't it, in terms of 3% fiscal target, 3% growth, partly to do with deregulation, and of course on the energy side. But tariffs, you say they will be selective rather than universal, tactical rather than strategic in nature. But I got to say, Mark, I'm looking forward to those nights when the tweets drop and you get these sort of exuberant corrections. I mean, is that something that I should hope for or worry about?
Well, I think you have to have the right mindset going into next year, which is have your kind of strategic long-term plan and then be prepared for some volatility. So I do think that will be a little bit of a change next year. You know, it's not going to be quite the extreme low volatility that we've had this year.
I want to know how you prepare for that, Mark, because options are incredibly cheap on the S&P, and it led David Rosenberg some of the strangeness between risk and risk-free assets, saying we are once-in-a-time lifetime situation where the concept of risk has totally been distorted, an investment world where there's no differentiation between what has traditionally been risky and what is riskless. Has the way that you construct a portfolio changed, Mark? Because you do see risky assets, what traditionally are risky assets, behaving like riskless assets.
It's a great point. Where we can for clients in portfolios, we do use more options because you can get attractive pricing when you structure positions. So yes, that's one tool that we've used. We have also added tactical positions in gold as a diversifier, you know, on the back of kind of changes to the way that countries are relating to the fact that the U.S. dollar still remains the reserve currency, and they want some optionality around that.
There is a debate, Mark, in the bond market. I said at the start there was this quiet tantrum. We've ramped by about 70 basis points since the September lows. You would see these quiet tantrums as opportunities to step into the bond market because what? You're a believer in the disinflation story over perhaps the tariff story. Is that right, in the inflation narrative?
Disinflation story, yes. And also I would say that, you know, there is some slowing in the U.S. economy that we think is going to happen. So with with a Fed that, has been talking a little bit tougher this week, but one that ultimately we think will continue cutting next year, with inflation remaining on the right track. I think also a lot of the fears about deficits are, the fears are there, and it's a risk scenario, but we think it's unlikely to be realized in 2025. So with all those factors, we do think there's an opportunity, but we are mindful that, because of the high deficits, there are risks around the long end of the curve, so we would stick closer to the 5-year duration.
And that's been playing out, Mark, despite a Fed that's been cutting. I mean, you could argue that maybe it's fears of inflation, not necessarily the deficit, but 30-year auction last week was very weak. Something like a 30-year, can you touch that at all, Mark? Is there something tactical to do, or are you just completely avoiding that type of duration outright?
We're staying away from it. We would, again, prefer shorter duration, look for dividend stocks. There's attractive yields in other places, so that's not, we don't want the extra risk there.
Mark, really wonderful to catch up with you. Enjoy the rest of this year and your holidays. Mark Hafele of UBS. Okay, let's get you some other top stories that are trending on the terminal this morning. President-elect Trump says that Ukraine needs to make a deal with Russia to end the invasion. He also downplayed the value of occupied land. All of that might signal that Trump will push for a settlement that codifies Russian territorial gains. He also criticized, again, the use of U.S. weapons to strike targets deeper into Russian territory.
Alibaba has agreed to sell its in-time department store business to Younger Fashion for around $1 billion. The move is to offload non-core assets. The sale is a result of a loss of $1.3 billion in Alibaba's initial investment. The e-commerce giant is struggling to grow amid competition from rising rivals like PDD and ByteDance.
And the NYPD is calling on Congress to grant local authorities the power to neutralize drones, citing the inability to act as a vulnerability to the city. Over the weekend, it received 121 drone-related reports. That is more than the total for all of November. Elected officials are calling for a clearer explanation from federal officials and expanded authority to act against drones that may appear as a threat. Manis, what immediately comes to mind is literally the NYPD shooting into the sky at drones, and that terrifies me.
That is a terrifying thought for everybody, and there's a lot of memes on Instagram showing exactly.
You've been enjoying that, huh?
Yeah, I've been enjoying that. So what do you do in your spare time? I read about bombs and drones and the NYPD shooting in the sky. Coming up, we're going to cut you down to the TikTok story. Time potentially running out. We take a look at the CEO meeting with President-elect Donald Trump ahead of the U.S. ban. Context matters every day on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Wednesday, the Fed decides.
The consensus seems to be that you need a beat on payrolls, an upside surprise on CPI, and the Federal Reserve will hit pause.
Yeah, but it's pretty high bar.
All of this seems very predictable.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
People feel good about where the economy is. Demand is obviously pretty strong. If there were black clouds on the horizon, what would they be?
Tune in to Bloomberg Surveillance, the Fed decides, starting at 1:30 p.m. Eastern.
We'll take a look at TikTok. You know, I have a warm spot in my heart for TikTok because I won youth by 34 points. And there are those that say that TikTok has something to do with it. TikTok had an impact, and so we're taking a look at it.
President-elect Donald Trump speaking at Mar-a-Lago, where he had hosted TikTok CEO Shou Chew ahead of the planned ban of the social media app. The shutdown set for January 19th unless TikTok's Chinese-based parent company ByteDance agrees to sell the app to the owner. TikTok, meanwhile, yesterday also asking the Supreme Court to intervene in order to rule this unconstitutional. Here with more is Bloomberg's Tom McKenzie. Tom, CEO after CEO going down to Mar-a-Lago, but TikTok obviously has a very specific ask. What details do we know about this meeting?
Yeah, so this is the CEO, as you say, of TikTok, Shou Chew, meeting at Mar-a-Lago with incoming President-elect, of course, Donald Trump. We don't know exactly what the two discussed, but you can probably make a pretty educated guess that it would be that ask around getting Trump to do anything that he can, of course, once in office, to derail this bill. Big question as to what Trump can actually do. This is a bipartisan bill after all. But as you say, the clock is ticking down. January the 19th, one day, of course, before the inauguration. This is on national security grounds, of course. This is the logic behind this bill. But as you heard from Trump himself, he's made quite the pivot from 2020 when, of course, he tried to ban TikTok, and ultimately that got bogged down in the courts, to now when he says he has a warm spot in his heart for the app, given the role that he says it played in terms of bringing in young voters for the Republican vote during the election. And it seems like he's now a fan of TikTok and at least wants to do something, whatever that is, to aid that business.
And the question is, what is the maximum upside that theoretically he can deliver? Danny and I were chatting about this morning, which is he has a warm spot for it, but you're dealing with the Supreme, you're dealing with something which is enshrined in law. So is this about implementing the ban? Is this about a 4-year extension? Because that's perhaps the best that legally at the moment they can expect.
Yeah, and again, this is a bill that the Biden administration say was crafted, that of course, Biden signed off on. It's a bipartisan bill. The Biden administration says, we don't want a ban on TikTok. We want divestiture. We want them to divest the U.S. business, sell it to a U.S. company, and ensure that data and the ability for Chinese authorities to access the data on tens of millions of Americans, that risk is diluted. That's what they're pushing for. TikTok and ByteDance, the parent company, have said they are not going to do that sale. They're not going that far. They're fighting this in the courts. They had it rejected, of course, by that circuit court in D.C. a few weeks ago in terms of their appeal for an injunction on this. That is not going to happen. They're now going to the Supreme Court, so we'll see if the Supreme Court weighs in before January the 19th. In terms of what Trump could do, some reporting suggesting that at least he could give them an extension of 3 months to try and find that buyer in the US, again, the buyer that they say they don't want to find, or it's how he interprets what it constitutes around divesting the business. So there's some latitude, it seems, for Trump to interpret what divestiture means for TikTok, and possibly that is an avenue that he could pursue.
Tom, thank you very much. Let's see what comes. There's a roll call of CEOs. We were just looking at that, heading to Mar-a-Lago. Danny and I were just looking at that roll call. I mean, we've got what, Danny? We've got Sergey. I mean, so far we've had Sergey Brin, Mark Zuckerberg, Sundar Pichai, and Tim Cook. But today, there's additional bookings.
Yeah, the reports are that Netflix's CEO will be going down to Mar-a-Lago. There was also reporting last week that this week from the Journal saying that Jeff Bezos would be heading down to Mar-a-Lago. It's a new era for tech and how these companies are conducting business. It is proximity to power. It is a seat at the table that matters for them.
And big tech want to make sure they've got a share of voice. You've got Elon Musk, of course, who has the ear of the president-elect, is very, very clearly part of every piece of policy. But my favorite line is, in the first term, everybody was fighting. And in this term, everybody wants to be my friend. I say that every day when I come to work at Bloomberg.
Everyone just wants to be the best buddy, wants to be the Elon Musk with his stock up 70%.
Danny is my first buddy.
Oh, that's so kind. It does nothing for my own personal share price, but, you know. But I
Kudos is
appreciate it.
everything. Coming up. Okay, we're a little bit giddy here this morning. I think we're kind of down to the holidays. Coming up on the show, we have, of course, the shocking resignation of the Prime Minister Trudeau's government, teetering on the edge. I should say that is his finance minister resigning. The government teeters on the edge. We'll discuss in just a moment on Bloomberg.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
It is Bloomberg Brief. I'm Menace Cranny alongside Danny Berger here in New York. Your front pages look a little bit like this from around the world. Kick it off with the New York Times. A New York State court judge rejected President-elect Trump's argument that his hush money case should be thrown out. The judge ruled that the evidence used was not subject to the Supreme Court's ruling on presidential immunity. Trump's sentencing is in doubt, though, due to his election as president.
Next up, Reuters has this, a report that Chinese leaders plan to set an annual growth goal of about 5% for next year. The budget deficit is expected to be raised to 4% of GDP. A 4% headline budget deficit That would be the widest since a major tax reform in 1994.
And Bloomberg leads with Canada's government being thrown into chaos. This is after the finance minister, Christina Freeland, resigned. Freeland's resignation was a major blow to the PM, Trudeau, who's struggling with low popularity. And after shocking the country with her resignation, Freeland published a withering resignation, writing that Canada is facing a grave challenge. Here's what she wrote on the way out. We need to take that threat extremely seriously. That means keeping our fiscal powder dry so we have the reserves we may need for a coming tariff war. That means eschewing costly political gimmicks which can ill afford and which make Canadians doubt that we recognize the gravity of the moment. Brendan Murray joins us now. Brendan, we're debating this exit by Freeland. She left a stinging rebuke on these gimmicks, as she calls them, being implemented by Trudeau. But this is fundamentally about a difference of how to handle the coming trade war.
Yeah, exactly. The next part of that statement that you just read talks about how Canada needs to push back on the America First economic nationalism, as she calls it, that is coming from Trump. So she was really seen, Freeland was really seen as one member of the Canadian government with the spine to stand up to Trump. Remember, she was across the table from Robert Lighthizer back in 2018 when they renegotiated NAFTA into the USMCA. Canada took some pretty tough lines on their dairy industry back then. They took a tough line on a dispute resolution panel that the U.S. wanted to water down. So she was really seen as a bulwark against Trump tariffs and Trump trying to push its smaller trade partners around. She is also familiar with Jamieson Greer, who's the incoming U.S. trade representative nominee. So there's a sense among people in the trade community that Canada lost a fairly tough negotiator here.
And Trudeau under immense pressure, Brendan, at a moment where world leaders around the world are facing pressure or facing their government collapse, just a general power vacuum. What does that do at a time when Canada, Germany, these types of places have to deal with an incoming Trump that wants to increase tariffs?
Yeah, I looked at the list today. About 5 of the top 10 U.S. trading partners have governments that are in weakened positions. You mentioned Germany. You could talk about South Korea. You could talk about France. The U.K. There are governments that want to negotiate with Trump that are losing in popularity and losing key ministers like Canada did yesterday.
Brendan, thank you so much. Bloomberg's Brendan Murray there. And Manus, we should say the CAD is still under pressure this morning,
Absolutely.
Declining versus the dollar about 0.4%. It just shows the strength of the dollar coming not just from American exceptionalism over the data. We're getting retail sales today, but again, on these trade pressures and what it means for governments around the world.
Yeah, I mean, if you think the state of flux, Olaf Scholz debilitated, Macron debilitated, the ability to deliver a cohesive response to potentially unilateral tariffs, that is the issue, isn't it?
Yes, again, it is a power vacuum in the world where you have immense, strong, some would argue, leadership coming from the U.S. and what exactly Trump wants to accomplish. Okay, coming up, equity returns may be more muted in 2025. That's according to Tegman Mon of Hennion and Walsh. We're going to catch up with Kevin next on Bloomberg Brief.
So what's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you
I had actually run tech banking and took Google public, so I had a little sneak preview.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
Stocks take a breather after the Nasdaq 100 hits its third record high in the last 4 sessions. That's ahead of the last few pieces of key data we'll get before the Fed. U.S. retail sales on deck, and another tech CEO at Mar-a-Lago. TikTok's chief visits President-elect Trump as the firm faces a ban in the U.S.
Well, this market grappling with the last full week of the year, and we are a little bit weaker, led lower by the Russell 2000 futures, your S&P 500 session that is also weaker by 0.3%. It has been very narrow gains, as Manus laid out, for this equity market. Meanwhile, in bond land, again contending with the Fed that we're pretty sure is going to be cutting by 25 basis points tomorrow. Even so, Manus, this is the situation we find ourselves in. Yields have been moving higher. It is a counterintuitive thing where you can have CPI come in line. You can have jobs data come in line too. Unemployment rates even a little bit higher. And yet bond yields push higher. Is this a market that the Fed risks losing control of?
Well, the debate is to, how much control do they have? My favorite line is that there's been a sort of a quiet not taper tantrum, that's a few years ago. There's been a quiet tantrum in the bond market, up 80 basis points. But if you reflect back, is that an opportunity for you to step in? Certainly UBS would say that is an opportunity for you to step in. But then you look at T. Rowe Price's call this morning, Danny, 5%, maybe 6%. By the end of next year.
And what does that do to equity markets, ones that have been exuberant? Yeah. Insert whatever superlative you want that these sell-side banks have been talking about. But a lot of what they've been talking about, Manus, is this expectation for broadening. That's not what we've seen, at least over the past 11 days. Let me just show you what the NASDAQ 100 has done in that time period, up 4.4%. It has beaten the S&P because there have been more decliners in the S&P 500 than gainers over the past 11 days. That is the worst breath for this equity market since the 90s. Joining us now is Kevin Mon, President and CIO at Hennion & Walsh Asset Management. Kevin, for all of the calls of 2025 broadening to end the year, it's not happening. Is that trade broken or bent?
I think December is giving us a little taste of what likely lies ahead in 2025. And I know history doesn't always repeat itself, but it often rhymes, right? Yeah. And going back to 1950, there have been 9 times when the S&P 500 has rallied by 20% or more in a given year. The good news is that in 8 of those 9 times, the market was higher the following year. I guess the bad news is it's only been higher by an average of 3.6%. So I expect this bull market to continue, but investors are going to have to be a lot more selective. Look beyond the Mag 7, look for new leadership, and hope that that breadth expands, not just in terms of stock market performance, but also in terms of earnings.
Look, I don't think anybody's calling the death of NVIDIA, but the stock is in correction. Broadcom's put on, what, 300-odd%, 38%. I was just about to ramp it up with a leverage to 10 times. 38% in 2 days. There is something, there is a bit of a shift in some of the structures in that big tech play. I mean, Broadcom up that amount, $324 billion in 2 sessions.
Yes.
NVIDIA in a correction. What does that say to you?
Yeah, I've been saying for the better part of the last year, there isn't only one play in the AI ecosystem. NVIDIA, of course, they're the hub of the AI ecosystem. But look beyond that. Look at Broadcom. Look at Taiwan Semiconductor. Look at the data centers. Look at the cooling solutions for those data centers. Look at the tremendous power need that exists for those data centers in multi-utilities or even nuclear plays. Investors would be wise to use this as an opportunity to diversify their AI holdings beyond NVIDIA, but don't necessarily abandon NVIDIA.
When it comes to tech, though, the real winner to close out the past few months, if you can call it a tech company, is Tesla, up 70%. And now you have basically every tech CIO, every tech CEO giving money to the inaugural fund, heading down to Mar-a-Lago. Netflix's CEO goes today. Is there anything to trade here? Is there something that you kind of want to own proximity to power in some regard over the next 4 years?
Yeah, you absolutely want to look for alternative power solutions. Our country's
Sorry, I mean proximity to power as in Donald Trump's power.
Different power. Okay, I thought you were going down the power theme road there. I had a whole answer prepared for you there. But in terms of political power, clearly there was an initial Trump bump, if you will. I think that dissipates as we go through the next 2 years. And leaning into those area markets, just like Tesla, just because of the recent presidential election, I don't think would be wise for investors. Nothing against Tesla or what may lie ahead for them in EV vehicles as a whole. But I think there's plenty of other opportunities, such as aerospace and defense or regional banks or even companies in the AI revolution.
I mean, let's just pick up on the banks, because I was just looking at what Mike Mayo says, and this sort of ties in with the AI theme. We're going to get record efficiency. It sort of plays into Scott Besson's idea, which is deregulation, giving you 3% growth across the U.S. economy. But then if you look at the AI overlay on banks, this is where Mike Mayo over at Wells Fargo says that you will see some kind of a transformation or sort of a more productive scenario in the banking. But the banking stocks have done pretty well up until now.
Certainly have, and I think they're going to continue to rebound. If I think back to the regional banking crisis, which started with Silicon Valley Bank, the 3 factors that led to that contagion: lower treasury bond prices, higher short-term yields, and the threat of more regulation have now all dissipated. So that creates opportunities for these regional banks. And I would expect to see more consolidation in that sector moving ahead, and perhaps it pick up in the pace of M&A activity. So I'm actually quite optimistic about the outlook for certain regional banks that don't have a tremendous amount of commercial real estate exposure.
Okay, now I want to hear about the other type of power. How are you thinking about? I mean, to be fair, it is a huge.
Now she's gone nuclear.
No, but it is a huge theme this year, right? All these tech giants, all these hyperscalers are trying to invest in their energy and buying up nuclear assets. How are you thinking about that?
If you think about it, Danny, by the end of 2030, it's forecast that data centers alone will account for up to 10% of our country's power grid. 10% alone. So these AI startups and these powerhouses are going to need alternative power solutions, whether it's nuclear, solar, smart grid expansion. That's where the investment opportunities lie. You know, I often like to use sports analogies when I come on the show with both of you. I think of Wayne Gretzky. You want to invest to where the puck is going, not to where the puck is right now. Alternative power solutions is where the puck's heading.
Yeah, just look at the deal that Microsoft did in sort of rejuvenating the nuclear plant. Mark Hafley said the two of us a little bit earlier on, 35 minutes ago, you got to have a different mindset going into 2025. What is your mindset? Because we're all eyes down on tweets overnight, which will shift the direction of markets. They will. It's not just an assumption, it's pretty much a fact, if history is anything to go by.
Yeah, I would remind investors that the next year is going to look very different than the last 2 years. The next 4 years is going to look very different than the last 4 years. And you need to recognize that there's going to be more short-term bouts of volatility. Volatility that was largely absent from the markets in 2024. Look, there's only been 9 days in 2024 where the market has moved by 1.5% or more lower. That's a low amount amount of volatility historically, that shouldn't be expected to continue. So diversify your portfolio, look to lean into those areas where we see optimism, aerospace and defense, regional banks, the AI revolution, the power solutions. Those are opportunities for growth. You can't just throw a dart at the dartboard this year and expect to get 20% plus gains or just ride the Mag 7. It's going to be very different ahead.
You never throw a dart. You never throw a dart at the dartboard, Kevin.
Sometimes it works better, you know? but
it would put me out of business as a portfolio manager, that's for sure.
I mean, but Kevin, what does that mean to have more volatility at a time that everybody seems to be on one side of the boat, that households are ever more exposed to equities, retail investors have been buying up ETFs, institutional investors are finally dumping cash and buying risk?
Yes.
What happens when there's more volatility when everybody is all in?
I believe those short-term bouts of volatility will be greeted by additional cash still on the sidelines. Look, a lot of investors still have exposure to short-term CDs that are going to mature in 2025. What are they likely to do? Jump back into the stock market, seeing that it's been up over 20% for the last 2 years. But that's where the risk is. They can't just jump in with their eyes closed. They got to look out for where the opportunities are for the next 2 years, not for where the opportunities were for the last 2 years.
Okay, well, we won't be throwing darts at the dartboard. It's all
don't throw them at me, please.
It's all strategic asset allocation.
Yes, sir.
It's a question of whether the 60-40 portfolio does well next year. Kevin, thank you so much. Kevin Mann of Henny & Walsh Asset Management. Let's get to Ven Ram. He joins us now. He's our MLive specialist. We're having a debate, Ven, in terms of the markets and the dollar. We've just had UBS telling us to have a different mindset going into next year. We're counting down to the FOMC. We're counting down to, some would say, this potentially hawkish cut coming from them. And then you have this building call that the dollar is at or near its peak. And as HSBC said to me, if it was an equity, it would be a hold. How does it look for you?
Well, it does look like the dollar is kind of priced in pretty much all the good news that is out there, Manus, if you ask me. So, as you mentioned, we are likely to get a hawkish cut from the Fed. The reason being that, look, they indicated a Fed funds rate of 3.4% for next year. And now, if you look at the evolving inflationary picture, it looks like they have to take back one of the cuts that they had penciled in. So I expect a higher median dot plot for 2025, and that would be causing the markets a bit of tumult. And I think that, but for the dollar, as far as the dollar is concerned, it's more or less priced in all the good news, even the ones that are going to come from potential tax cuts in the US and tariffs. So I think, you should look to fade the dollar from here, if anything, going forward.
Then fade the dollar, but you have central banks like the BOJ saying, or not the BOJ, but rather Japanese authorities saying that they are not as concerned about a weaker yen, that they're not as concerned as what that means to their economy. And they're going to be having their decision on Thursday, too. It's a moment where you're also seeing dollar strength coming because of local governments like Canada under pressure. What does that do? What does that do to this trade?
Certainly, in the short term, I think that the dollar is going to be supported. There's no question about it, particularly in the context of BOJ and Canada that you mentioned. The BOJ is likely to hold rates Thursday because of political pressures. They want to get the stimulus package through. They want to get the budget through. So it looks like the BOJ is going to stay on hold. But what we have heard from Ueda consistently through this year is that he wants to address the real negative interest rates that they have, which is to the tune of -1% if you look at the 5-year real yield in Japan. And if he is serious about addressing that, I think that the yen has upside potential from here. It's not so much a question of how much the interest rate differential compress, but it's a question of the direction of the move. And I think the direction of the move for the yen is going to be higher if the Bank of Japan does indeed follow through on his remarks. If they don't follow through on those remarks, then yes, the yen will cop it on the chin.
Ven, thank you so much. And again, Fed tomorrow, BOJ and BOE on Thursday. Ven Ram there from our MLive team. Coming up, TikTok trying to save itself before the music is supposed to stop next month. We're going to dive into TikTok's fight to stay alive on your Bloomberg Brief.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
It's Bloomberg Brief. I'm Menace Crenny alongside Danny Berger here in New York. The U.S. President-elect Donald Trump says that the social media app TikTok has a warm spot in his heart. So we've heard that overnight. This comes 1 month ahead of the app's looming ban in the U.S. TikTok's parent company, ByteDance, has formally asked the U.S. Supreme Court to block it, which is set to take action on January the 19th. Let's get to Megan Crane. She's in Washington. So this was, by all accounts, the TikTok CEO going to Mar-a-Lago in full lobbying mode. What is the best potential outcome that can be delivered for TikTok? What is in the remit of President-elect Trump to do for them?
Good morning. Yeah, so the app is set to be banned in a month, the day before Trump takes office. But yesterday they did ask for relief from the Supreme Court. If they are granted some level of a stay, then that lands that decision squarely on the shoulders of President-elect Trump. So he could not necessarily just stop the ban outright, but he could possibly look for ways to redefine divestiture, find a way to allow TikTok to continue to operate in the United States more easily. And that's definitely what they're looking to make happen.
And of course, as Manus mentioned, the TikTok CEO going down to Mar-a-Lago, everybody trying to sort of kiss the ring to figure out the best way to navigate this environment. And that also came from SoftBank yesterday. Donald Trump, the president-elect, announcing a $100 billion investment from them in the U.S. Just take a listen to what he said down at Mar-a-Lago.
SoftBank will be investing $100 billion in America, creating 100,000 American jobs at a minimum.
My confidence level to the economy of the United States has tremendously increased with his victory. So because of that, I'm now excited to commit this $100 billion and 100,000 jobs.
Megan, is this the model for foreign companies who want to do business in the U.S., for foreign companies who want to avoid tariffs and not land themselves in hot water with President-elect Donald Trump?
So President-elect Trump has definitely demonstrated that working with him, he enjoys personal relationships, reaching out to him directly and sort of encouraging his support personally is an effective way to get his support. And the tech CEOs and SoftBank have definitely learned that from the first Trump administration, and they are all in at this point, right? Everyone is lined up at Mar-a-Lago trying to meet with Trump ahead of the holidays, really ahead of inauguration, to make sure that they are on his good side. The president-elect has a tendency to change his mind, be fickle, and there's nothing better than setting up a relationship before he takes office.
Well, before he takes office, there's another small fly in the ointment. It's the hush money case. He's lost the bid to have this tossed out. This is over immunity. So where does this leave Trump? Because once he becomes president, we shift into a completely different paradigm, don't we? But what does this ruling say?
Right. So the president-elect was trying to use the immunity ruling recent immunity ruling to say that the state charges against him should not be enforced, and that just is not going to be the case. The judge in New York said that his actions in the hush money case were personal by definition and not an official act, which is what the president would have immunity for. That leaves this, like you said, a fly in the ointment for his inauguration, but it was never really likely that he would go to prison for these charges. And there are lots of appeals left for him to sort of stretch out. The judge could also just defer sentencing till he leaves office. He would be, older, an 82-year-old man, but there would definitely be the opportunity to just tackle that at the time.
All right, Megan, thank you so much, as always, for getting up early for us. Bloomberg's Megan Crane. All right, to geopolitics now, where President-elect Trump said that Ukraine needs to reach a deal to end the Russian invasion. And he also signaled that he may push for a settlement that codifies Russian territorial gains. Joining us now is Bloomberg opinion columnist Mark Champion. Mark, how do we interpret where Trump actually lands on this? He had talked about some time before about supporting Ukraine as a negotiation tactic with Russia. What could a Trump-brokered end to this war actually look like?
We still don't know very much, to be quite honest. What he is saying at the moment, he's not a detail guy and suggests that he's not yet kind of fully up on the details. What he's saying is, the areas that they've lost have all been destroyed now. The cities are destroyed, so there's not much point getting them back. But that isn't actually what President Putin in Russia is demanding. What he's demanding is to keep those territories plus the territories that he has annexed in name but does not yet occupy. And also, of course, Crimea, which is pretty much very little touched by the war. It's the two sides are positioning. At the moment, Russia seems much more clear what Putin is doing. He's, escalating his rhetoric, saying that, we're going to have to take on NATO. Our red lines are being crossed. We're moving on to, expanding the war to one that will end up being with NATO. So he's really sort of expanding the context of negotiation so that there'll be more, he can be giving up, if you like, the threat of a war with NATO in order to get what he wants in Ukraine. On the other hand, President Trump seems to be, conceding already, some of the sort of fundamentals on Ukraine. So it's a little hard to work through. As we know, President Trump, he doesn't always, he's not predictable. So I think we need to sort of hold judgment.
Well, Mark, overnight we've also seen the head of Russia's nuclear and the chemical and biological weapons forces was killed in a bombing in Moscow. Now, Ukraine is claiming responsibility for this. The question that comes to mind is how embarrassing is this, hitting at the heart of Putin's regime? How embarrassing is this for Putin? And will it provoke a major escalation is the question, or again, is this another sort of tactical play by Ukraine ahead of whatever these negotiations may be?
Yes, I mean, it is embarrassing, of course, to be, for the Ukrainians to be able to strike, in the capital, someone who is so senior. He's in charge of, both the nuclear forces and chemical and biological weapons. So this was a very, very senior guy, and one who's been sanctioned by the UK, for example, for the use of chemical weapons in Ukraine. So he was an obvious target for the Ukrainians. They found him and they killed him. Whether this leads to an escalation is another matter. I imagine it will, in some sense, rhetorically. The Russians are calling this a terrorist act. We do know that Putin is very loyal to this kind of staff member.
Indeed, indeed. One of the critical moments here between Ukraine and Russia. Bloomberg's opinion, Mark Champion. This is Bloomberg.
Countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States. Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
All right, let's get you set up for your trading day on this Tuesday. The last big piece of data we'll be getting, U.S. retail sales. That comes at 8:30 a.m. Eastern. Another little piece of data, industrial production, 9:15 a.m. Eastern. Then an interview with Bank of America CEO Brian Moynihan at 3 p.m. So the bigger pieces might be tomorrow and Thursday, where we have the Fed, followed by the BOE and the BOJ.
Yeah.
My general advice is continue to seek out companies or people that are maybe 1 stage or 2 stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
When I was younger, I used to be in bands. I'd play drums in bands and toured America with them, did a lot of session drumming, recorded albums. So yeah, it was good fun doing the drumming. The only reason I stopped it, well, I still play, but not as serious as I did when I was younger, but drumming doesn't pay the bills. I was never good enough to be able to pay the bills with it, but it was good fun. I started RJF, and the reason I started it was I saw a gap in the market for particular early stage and startup businesses. With the experience that I've got of running businesses, of being a finance director at the very biggest companies in the world to being finance director of small startups, we were looking at providing more than just basic accountancy services. So yes, we'll do all that, we'll do all the basic, all the statutory side of things that you need to do. But there's so much more value that we can add, and I wanted to have my experience to help these startups, because a lot of them don't really know where to go. You can go to your high street accountants and they can do a good job compliance-wise, but you would question whether they've actually been in the firing line of a business. Have you been in a business where you're thinking, how do I pay wages next week? Or business is really successful, what do we do with it next? Or how do we grow it? How do we grow into international territories? Or how do we grow our markets? How do we expand? So a lot of the experience I've seen over the years and seen different types of business in different sectors, I thought, well, it's a real value that I can add to these businesses as opposed to just being an FD, because a lot of these businesses can't afford an FD. But if we can take care of their statutory side of things, the compliance side of things, I'm on hand to be able to help and advise businesses with their growth strategy, or if they're in difficulty, help them through these times.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
On the brink,
Check out the Canadian dollar, weaker once again, levels we haven't seen going back to 2020, following disagreement with his finance minister. Trudeau is almost flying solo.
Almost. He's literally hanging on to his political life. He's been in power for 9 years, and you have a stunning falling out between the finance minister, and this has to do with really the deficit and how to control the deficit in Canada. Behind the scenes, there was a lot of disagreement on checks they were maybe going to send out to Canadians, some tax breaks around the holiday season, but the crux of it comes at the time when Trump is talking about more tariffs with Canada, and these two disagreeing members of his own party say enough is enough. I think you have to go.
The parallels between what's happening in Germany and what's happening in Canada are really remarkable. Olaf Scholz firing his finance minister and then getting that no confidence vote and having to hold early elections. And then the Canadian finance minister resigning over, guess what, budget issues, over how to respond to the tariff pressures, as Anne-Marie, you were mentioning, from Donald Trump. It raises this question about whether Justin Trudeau can last until the next election time. There is something happening. And I think that it is notable that in these two developed markets, there is something so similar unfolding with the finance minister pressuring the top of the ticket.
Go back to June and go back to the G7 meeting in the south of Italy and have a look at the picture and ask yourself who's going to be left over the next few months. The leaders of Britain, Japan, gone. The US, Biden, going. Macron under pressure. Scholz basically triggering an election. Trudeau. Time is up. Look at the polls. We're talking about a 20-point gap between his party and the Conservatives. The only person still standing with any strength is Giorgia Meloni of Italy.
And at the time when I was in Puglia, we were talking about that. It was all of these men coming to the south of Italy, to Puglia, to meet basically the Principessa now of Europe, the individual we knew who would be really the main speaker representing Europe, dealing with the incoming administration ahead of that U.S. election. Politico that week called it the Last Supper, and they couldn't have been more correct.
More on that story a little bit later this hour. Coming up, we'll catch up with Katrina Dudley of Franklin Templeton, seeing a supportive backdrop for equities. Bloomberg's Mike Shepard on Trump's meeting with the TikTok CEO, and Mark McCormick of TD with Canada's government very much on the brink. We begin this hour with stocks taking a bit of a breather ahead of fresh US data at 8:30 Eastern Time and a Fed rate decision tomorrow afternoon. Katrina Dudley of Franklin Templeton is optimistic heading into next year. The current market environment is a function of animal spirits following Donald Trump's victory and market liquidity that is supportive. Strong market performance was historically not a reason to be bearish. Katrina joins us now for more. Katrina, good morning.
Good morning.
It's good to see a massive underperformance so far in the month of December for the equal weight S&P. For the small caps on a Russell, underperformance for them, outperformance for a market cap S&P, particularly for the NASDAQ 100. What do you think is going on at the moment?
Look, I think at the moment we have had a period of digestion. You've had the change in the administration. We've had this, as we talk about, this rekindling of animal spirits. And so I think that what we're looking at is what can happen going forward in 2025. We think pretty much 2024. We're at the tail end. People are checking out, going on vacation. So where are we setting up for 2025? I think that's the most important thing. What we do need to see, though, is the breadth in the market expand. And we've been talking about this for a long period of time, but I think that we need to see that breadth work for the market in 2025, or you're not going to sustain it.
Expectations for the United States seem to be sky high. We went through the Bank of America Fund Manager Survey, cash allocation record low, allocation to US equities record high. The bar for Europe is so much lower. A question we've asked around the table quite a few times: how little needs to go right in Europe to change that story?
You know, I grew up as a European fund manager, and I've been bullish on European equities for my entire career. Not exactly the best decision in my career-wise. What do I think is happening? Europe is just the US's poor cousin. We just started the conversation with how much turmoil we're having across the region in terms of the top of the house and the transition that you're having across various different markets. If you look, however, the market is cheap. But cheapness now, we found out, is not a reason to go long equities. It's not a reason to suddenly go all in. They've done the 25 basis point rate cut, which is positive. They have also got the cheap valuation that I mentioned. The market has also underperformed. Inflation there is actually under control. It's under the long-term target. The question is, what is the catalyst? They don't have the tech engine, the AI engine that we have here in the United States. On terms of the labor market, you've got a stable labor market, but it's not an energized labor market. So the question is, even though all of these factors are positive, what is the catalyst to drive the market? And I can't find one yet.
What about rate cuts? I mean, this is basically one of the arguments, is that if you follow the rate cutting cycle, that'll take you to Europe much more than, say, the U.S., at least with certainty.
Yes, I think in terms of the rate cut cycle within the U.S., given where we're looking at some of the inflationary policies and what we expect on the horizon, what we're seeing in terms of our deficits, we're not as optimistic as the market has been about further rate cuts here. As you see, however, in Europe, rate cuts are not necessarily a driver of market performance, particularly if you're cutting rates in order to generate economic growth. So you're actually cutting rates in response to weakness. It's a very different story than we saw in the United States, where the rate cuts were really more of just tinkering around the edges and adjustments. So I can't put my hat and look at and saying to a European investor, they're going to cut rates. That's the reason you want to own equities. You need an underlying story. And Europe needs to get back its animal spirits somehow.
Right, and I think a lot of people are trying to figure that out. You were saying that in order for the thesis that you have, this sort of bullish American exceptionalism story to bear out, you need to see breadth get better.
Yes.
And we've seen pretty bad breadth. And I keep thinking about the other way to read that every time I say that. But Max Kettner of HSBC said, we've previously found breadth to be a poor timing signal. Why is it important to you? And at what point do you change your bullishness based on that?
I think the reason is that we don't want to over-index to just so few stocks. So I think that that's the first indicator of breadth. The second thing is, if I look at what has driven that top part of this market, those magnificent seven, it has been AI, and it is really being AI fuel growth. The second stage of AI is actually AI permeating businesses throughout multiple lenses. So if I look at it, the first element, from our business point of view, is just our own back office and the ability of AI to help us serve our customers better, get better data on them, meet their needs more quickly. The second element of AI for us is obviously from the investment lens, where we're looking to invest in other companies. And then the third element of AI is how we permeate it through actually making better investment decisions. So how do we control better for risk? How do we identify trends? How do we look at unintended correlations? And I think that that's the three-pillar part of AI is what's going to drive the next part of the market. It's this idea that AI isn't just a one-man band or one-person band here. It is really going to start moving into the kind of mid-caps and the upper end of the larger caps.
Can that happen next year if the Fed finishes their rate-cutting cycle?
Yes. I think that the Fed is going to be pretty much done. I have a look at some of the notes. We have been on the end. We have been fairly much in the camp that rates will be higher, that the rate cutting cycle would stop much earlier than the market is expected. And I think the market's moved to our position. We are looking at federal deficits. I think as we go into the next year, you need to have a look. People are bearish. So why are they bearish? Well, they're bearish because the market's done so well.
Well, T. Rowe Price is talking about potentially even 10-year yield hitting 6%. At that point, when does that start to eat into equities?
In terms of why would it eat into equities, obviously if you have that long end of the market where you've got a ton of value sitting in the long end, you've got over-leveraged companies, that's where the rates are going to hit you again. But if I take a look at that type of narrative, what you're basically saying is that the fiscal deficit is going to destroy America. And I just cannot see that. I have a look at what's happening. I have a look at everything that's been done to address our costs. And I think that America has still got a very good narrative. So I think we can adjust to those type of yield numbers. I think what we're more adjusting to is the fact that the yields, the rate cutting cycle is pretty much at the end of it. It's done.
Neil Dutta of Renmac just publishing, Lisa, concern dollar's gone up. His concern is going up just a little bit. 2 years ago, back in 2022, he recalls the consensus was largely on the recession train for the coming year. He took the other side. Today, the consensus is fairly sanguine on growth next year. However, labour markets have been cooling. I see myself on the more cautious side of the consensus at present. There is a bit of pushback out there regarding the labour market, if not the deficit.
Never thought that Neil Dutta and Andrew Hollenhorst would be besties, but that seems to be the case. And it does seem like there is this feeling maybe guys stop with a sense of everyone's doing just fine, because you do see cooling, you do see a sense of that stagnation reaching a tipping point when it comes to the mobility in labor markets.
More data coming a little bit later, 8:30 Eastern time. We get US retail sales. Katrina, good to see you. It's good to catch up. Thanks for dropping by. Katrina Dudley there of Franklin Templeton. With an update on stories elsewhere this morning, let's cross over to Bloomberg's Danny Berger with your Bloomberg Brief. Hey, Danny.
Hey, John. Ukraine has claimed responsibility for the assassination of a Russian general in a bomb attack in Moscow. According to a person familiar, Ukraine's security service carried out the killing of Lieutenant General Igor Kirilov and his assistant. Russia said the two servicemen died when an explosive device planted on a scooter detonated near the entrance to an apartment building. Investigators have opened a criminal case for murder. The New York Police Department is calling on Congress to grant local authorities the power to neutralize the drones that have been spotted flying around the Northeast. The NYPD says the inability to act leaves the city vulnerable. Over the weekend, the NYPD received 121 drone-related reports. That is more than the total for all of November. The EU is opening an investigation into TikTok over its handling of the Romanian elections. It cited concerns about fake accounts and foreign interference. The probe examines whether TikTok failed to prevent manipulation of its recommendation system and properly labeled political content. TikTok then provided information on its efforts to address election challenges and updated its in-app election center to the link of an official Electoral Commission's website. And that's your brief. John.
Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, a warm spot for TikTok.
We'll take a look at TikTok. You know, I have a warm spot in my heart for TikTok because I won youth by 34 points. And there are those that say that TikTok has something to do with that.
That conversation up next, live from New York City this morning. Good morning.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the...
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Another bull with a bullish price target on the S&P 500 for next year. Julian Emmanuel of Evercore looking for 6,800. One of the most bullish right now, John Stolfus of Oppenheimer, looking for 7,100. Equity futures right now in the S&P pulling back by 0.25%, really echoing that sentiment that we've seen across the board on Wall Street. The fund manager survey out of Bank of America this morning, record low cash allocation, record high allocation to US equities. We're seeing this on repeat, Bramo, time and time again over the past few weeks.
The question a lot of people have is, what do you do with this? All right, Michael Hartnett over Bank of America is saying that there is a contrarian sell signal from some of this overwhelming bullishness that led cash to the lowest levels. But Max Kettner, echoing a little bit of what we just heard, basically saying that their biggest pushback from their bullish call, two things. Valuations are too high and everyone's bullish. Is that enough of a reason to get bearish?
You can sense they're uncomfortably bullish.
Yes.
Can't you? A lot of people that come on this program just do not want to be bearish going into 25.
How can they be? At a certain point, everyone's talking about the potential for rate cuts, albeit maybe just a few more, the idea of lower taxes, and then there are all the potential headwinds, but you don't see those yet. So people are saying you can't lean against it. You can feel that reticence just in a lack of breath in the market.
And that's that 100 record high. S&P 500 pulling back a touch. We're down about 0.2%. Under surveillance this morning, a warm spot for TikTok.
We'll take a look at TikTok. You know, I have a warm spot in my heart for TikTok because I won youth by 34 points. And there are those that say that TikTok had something to do with it. TikTok had an impact, and so we're taking a look at it.
So here's the latest this morning. TikTok CEO meeting President-elect Donald Trump at Mar-a-Lago just weeks before the app is set to be banned. Trump making favorable comments about TikTok as the social media company asked the Supreme Court to block the ban. Bloomberg's Mike Shepard joins us now from the nation's capital for more. Shepard, it's good to see you, sir. What does the calendar look like for this social media app?
Well, the clock is really ticking on the company right now. They face this existential threat as soon as January 19th, and this is when that divest or ban law goes into effect. It requires TikTok's Chinese owner, ByteDance Limited, to sell the company to a U.S.-friendly buyer by that date, or it faces a ban. And what that means is that app stores may no longer service it, and its accessibility via VPNs could also be targeted by U.S. authorities. Now, all that could change under a Trump administration, potentially, because they will be the ones largely charged with enforcing it. So Trump's signals of a warm feeling for TikTok could suggest that he may ask his Justice Department perhaps to go a little bit easier on the app as this enforcement goes into place, or perhaps he even goes back to Congress to ask for some sort of a repeal of this law. However, there is a big asterisk there, John, and that is that there is a law on the books. It was written very airtight following the rejection of the ban of TikTok that Donald Trump tried to put in while he was in office. Remember, these warm feelings are a bit new to the president. And two, lawmakers really rallied behind banning TikTok. It was an overwhelming vote in favor of doing so. And it will be tough to imagine them simply accepting that the law that they passed and had President Joe Biden sign simply be ignored by Biden's successor.
Well, Shep, not just any lawmakers. We're talking about Senator Marco Rubio, who's been talking about Chinese espionage in TikTok since 2019. How divided is the transition team right now about this app?
We're not getting too much of a window inside the room into their thinking, but you're right, Anne-Marie, to bring that up, because Marco Rubio, and let's add a few more names to that mix, Mike Waltz, the incoming national security advisor to Donald Trump, also voted in favor of the TikTok ban and is a noted China hawk himself. And then there is the incoming head of the FCC, Brendan Carr, who also railed against the app and the national security risks it posed. Remember, this is what is driving this divest or ban law and the call for the Chinese-owned company ByteDance to sell the app. The U.S. policymakers here in Washington are concerned that national security could be compromised, that the app could be used to gather intelligence and data on U.S. citizens, including people in sensitive roles within the government, and also be used to gather, or rather to disseminate propaganda that is unfavorable to the U.S. and U.S. interests. So we will see pushback within the administration and in Congress. But then again, we have seen so many of Donald Trump's loyal supporters, his allies, and the people who work for him fall into line if that is what he wants.
Well, let's cut through the noise. He says that this is because he won the youth vote. He didn't, but he did make significant inroads with youth voters. He's also talked about the fact that, you know, if you don't have TikTok, then there's Mark Zuckerberg and wants to make sure there's competition in the tech space. And then there's a Trump donor by the name of Jeff Yass. What is driving Trump to this warm, fuzzy feeling of TikTok?
You know, there may be one other thing, and I think those are all factors, Anne-Marie, and you brought up a couple of key points there. Another is simply that TikTok also just appeals to Trump in a way, to his instincts as a showman, as an entertainer, and he also likes engaging in this kind of corporate diplomacy. We also see other high-profile tech CEOs making a pilgrimage, if you will, to Mar-a-Lago to meet with the president-elect to try to get their voices heard, to get their business issues presented to the president-elect before he takes office, so he knows what is at stake for them. Jeff Bezos is set to head there tomorrow to talk about a range of issues. Some of them may include antitrust concerns and whether the strict enforcement being pursued under the Biden administration will continue under Donald Trump. We also saw the Google CEO Sundar Pichai and one of the co-founders, Sergey Brin, visit Trump at Mar-a-Lago, and Mark Zuckerberg himself also had dinner with Trump and Tim Cook. But Xiao Chu of TikTok has probably the most at stake and most immediately. So these are all the different push and pulls there. It's the corporate diplomacy, it's the campaign interests, Trump's instincts as a showman and entertainer. And yes, he does see it as a way of appealing to younger voters, even if he didn't actually win them through TikTok.
When you put this together, Shep, corporate diplomacy, as well as some of the national interests and the national security threats that some people have raised about the likes of TikTok, has there been any cohesive message coming out of the future administration about what investments from foreign companies would look like coming into the U.S., whether they would be welcomed or whether they would be shunned?
Well, we did get a signal of that in pretty stark terms yesterday with Masayoshi Son of SoftBank Group coming to Mar-a-Lago to announce a $100 billion investment plan in the U.S. He didn't offer too many specifics, but people familiar with the matter did tell Bloomberg that it would be in the area of artificial intelligence, semiconductors, and other high tech. We don't know where the money will go or to what startups, but it was warmly embraced by Trump, who literally embraced Masayoshi Son on the stage at Mar-a-Lago yesterday and handed the microphone over to Son, who talked about what he sees as great confidence in the incoming administration. And that was a confidence that Trump sensed and then even went further and dared Son to try to double the investment he had just tried to announce at $100 billion. So this is the sort of reception that we'll see. Now, one thing Donald Trump has tried to get foreign companies to do is not only invest here and move some operations here, he wants them to make their headquarters here. And that may be a bridge too far. We don't see SoftBank moving its operations here. This is really money coming into the U.S. for projects here.
Shep, forgive me, but I'm trying to put this together with Nippon Steel. Here we have someone who is over in Japan investing a significant amount of money into artificial intelligence and a number of sectors that are considered pretty sensitive for national security, at the same time that Nippon Steel is completely an unfavorable deal. We've heard that from the current administration. We've heard that from the future administration. Is that relevant, or is there enough sort of apples to oranges that I'm conflating two issues?
I don't think you're conflating two issues, because there is some dissonance that you're picking up. Wait a minute, why is one foreign investment good and this one, maybe by Nippon Steel, bad? Now, the big difference really is in more the symbolism. You know, there is a strong union interest, obviously, in U.S. Steel, and then there is also just the iconic quality of the company itself. The name U.S. Steel, the location in Pittsburgh, Pennsylvania being a critical state in any presidential election, the one we just had and the one we're going to have 4 years from now and even 8 years from now. So there is a stronger political component to the U.S. Steel question and Nippon Steel's attempts to buy it than you see with something like SoftBank or other foreign companies trying to invest here. And it is also taking control, and that is a different thing. If SoftBank were to try to acquire a name brand U.S. company and make it Japanese flagged and owned, that would be a different story perhaps. And that would also kick in the same process that is scrutinizing the U.S. Steel acquisition, and that is the CFIUS process we've talked about before.
Hey, Shep, appreciate your time, sir. Thank you. Mike Shepard down in Washington, D.C. Successive governments down in Washington, D.C. just completely undermining the CFIUS process. We've totally blurred the lines between what is and what isn't a national security risk. The fact we're even having this conversation around TikTok, I find absolutely ridiculous. If it's a national security risk, there is no other conversation. From New York, this is Bloomberg.
You've released, I think, a Bollywood song, a reggae album, a gospel album. You've done a bunch of different genres. Is there any genre you haven't tried that is, because it feels like this next one you're doing is sort of back in your sweet spot.
I did a jazz album that I haven't released yet. It's more or less like spoken word over jazz music. That was a genre that I've always wanted to go into. Quincy Jones hit me to Mr. Mumbles, Clark Terry, which was his teacher. And we had an opportunity to spend time with Mr. Terry, and we did a record together, and that was a genre that I always wanted to venture into because I felt like I had a jazz voice.
So your role in a jazz album is just your singing?
No, I'm spoken word.
Or spoken, sorry.
My voice, my conversation, my poetry, you know.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
So it is December 17th, and just check out the performance so far. Nasdaq futures right now slightly positive on the session. We're slightly negative on the Russell. Check out the month. The Russell is down about 3%. The Nasdaq 100 is up more than 5%. We're talking about 8 percentage points of outperformance for the Nasdaq 100 halfway through the month of December.
This basically is the complete reversal of what everybody thought would be the Trump trade, where suddenly the small caps would outperform, and you saw this rush to the undervalued names that was supposed to lead for the next year. Question is this a blip, or is this really telling of what's to come? AI tends to be the safe haven. So at a time of great uncertainty with respect to policy and rates, it continues to be those large tech names that drive performance.
We talked about that headline that came out of Barron's over the weekend, Embrace the Bubble. Bank of America. Bubbles can last longer than you can stay underweight. That's their message going into 2025.
Which is the reason why they're cautious, and yet they recognize the fact that everybody is completely bullish. They do talk about a contrarian signal. At the same time, they talk about how investors are the most underweight European stocks since October 2022, even as they are the most bullish or increasing their allocations to U.S. stocks the most in September 2023. At what point is the bar so low? Do you go into Europe? Katrina Dudley, not yet.
Talk more about Europe in just a moment. That's the Nasdaq and the Russell. The S&P, by the way, is down by about 0.2%. In the bond market, 2-year, 10-year, 30-year, yields a little bit higher, up by 2 basis points, 442.25. On a 2-year, up by 3, 427.63. Retail sales later on this morning, Lisa. The last big data point going into the Fed's meeting tomorrow.
Yeah, it's going to be a frustrating number to interpret. I'm just going to lay that out right now because it's going to be the rebound effect from the hurricane that's going to really drive a lot of noisiness. At what point can people get some confidence from these retail sales? Under the hood, I'm going to look at what people are buying. If it isn't necessarily just that they're buying a lot of eggs that are much more expensive, that will be a good thing. It will suggest that maybe it is broad-based, and it really speaks to the composite PMIs that we got yesterday that really outperformed the U.S.
Data was good. S&P Global Services, big upside surprise there going into the Fed meeting that starts today and concludes tomorrow. In the FX market, dollar strength, dollar strength, dollar strength. Through the quarter so far, only one down week for the US dollar in Q4. At the moment, we're down to about 105, 104.91, and euro dollar down by 0.2%. More bad news for Europe. Where do you want to begin? Where do you want to end? German business confidence just not great.
Honestly, there's a really difficult reason to push against the consensus, and it has to do with where else are you going to go? Are you going to go to Europe, where basically you can't see governments stay together for longer than a few minutes or a few days? Are you going to go to Japan, where they're talking about not necessarily hiking rates, and suddenly you have this really renewed low, a renewed weakness in yen? What is the alternative? And that is why we keep watching gold. Is that the barometer? But even that hasn't necessarily performed. So at a certain point, either embrace the bubble or go home. That has been what performance has done.
I'll tell you what it's not. The alternative is not the Canadian dollar. And we'll talk about Canada a little bit later. Give Canada such a hard time on this program, don't we? Don't mean to.
Hold on a second. Let's not throw us all under the bus.
Hey, we're a team, aren't we?
Some of us are defenders.
I get
Canada.
called bearish all the time because of you.
Okay, well, okay, fine. You could be bearish, but, you know, Canadians are nice.
We thrive together.
We do.
We survive together. We drown together. We're a team, Brammer. Under surveillance this morning. Bank of America's latest global fund manager survey finding sentiment is super bullish, showing cash allocation at a record low with U.S. stock exposure at all-time highs. Strategists pointed to Trump's election victory, U.S. growth optimism, and a Fed that's cutting interest rates. That's the opposite of a toxic brew into next year.
Yeah, what is this? The Goldilocks soft landing, the Nirvana
stirred into a pot.
You know, well, let's come up with something beautiful. There is this feeling that a lot of good news is priced in, but there still is hesitance. You talk about how people are out there looking for reasons to be bearish, and one of the biggest ones is potentially a disorderly rise in bond yields. That's the T-Rowe price point about potentially getting to 6%. But even that, people are pushing against. You have basically the likes of the biggest bull on the street, John Stoltz, is saying, it doesn't have to be perfect. It doesn't have to be roses. Yields can be higher, but AI is going to solve everything.
This reminds me of the Chris Harvey note last week when he said, shy bulls, really? And they're only potentially shy because they just want to be contrarian. It's not driven by fundamentals. They're just concerned that everyone is on one side of the boat, and potentially that makes them a little bit nervous.
Well, they're not in China, and there's some nerves around that, that's for sure. Reuters reporting that China plans to set an annual growth goal of about 5% for next year. Officials are also said to be planning to raise the budget deficit to 4% of GDP. Both of those targets are largely in line with economists' expectations after policymakers pledged to boost government spending. That's the latest out of China. Here's the latest out of Canada. Pressure building on Canadian Prime Minister Justin Trudeau. Calls for his resignation growing from his own members from his own party after Finance Minister Chrystia Freeland stepped down. Her resignation coming just hours before she was expected to unveil an economic update.
You were right, Jonathan, to bring up the G7 photo op. A bunch of lame ducks around Georgia Maloney, and that's what we are seeing. This time, it's Canada. It was in Germany. It was in France, where Macron is just barely holding on to power. And now it's Justin Trudeau. Members of his own party, this is what's stunning. It's not the opposition. It's his own party that's saying now might be the time to go, because the finance minister stepped down, and in such a scathing way. Basically, she admitted that she was basically demoted or fired because they disagreed on how to deal with just their own economy, but also what's going to happen with Trump coming into power.
Liberal virtue signalling is taking an absolute beating over the last month. I think we have to point this out. Only a week ago, the Canadian Prime Minister, Justin Trudeau, comes out and says, "You have an ally in me. I'm a feminist," and talks down to American voters for electing Donald Trump and not electing Kamala Harris. And then days later, puts the pressure on his own female finance minister. I mean, come on.
First female finance minister. And this morning you have the Globe and Mail, for those Canadian viewers, saying Freeland's latest woman to exit the cabinet as other question Trudeau's feminist credentials. He has been in power for 9 years. Maybe he'll be stepping aside for Mrs. Freeland.
You can say whatever you want, but ultimately it comes down to debt. And I think that that's the bottom line. And I think that everyone can coalesce around that, and you can signal whatever you want, but if the deficit and the numbers don't add up, everything else doesn't make sense.
She did not want to be the face of that.
Correct.
That's for sure. And that resignation coming hours before that economic and fiscal update. We'll have more on this story from the economic and foreign exchange perspective a little bit later this hour. Let's turn to Europe. German lawmakers clearing a path for an early election in February, backing Chancellor Olaf Scholz's plan to end his embattled administration. Bloomberg's Ollie Crook joins us now for more. Ollie, welcome back, sir. It was something he triggered, something he hoped for. What's next now for the people of Germany?
So listen, this was the expectation, but it's still significant. This is really only the second snap election we've ever had in Germany since the fall of the Berlin Wall. The last one was in 2005, and that is actually the election that ushered in the Merkel era, which has paved the path for many of the things that we see before us today. What we are getting today, after yesterday, where there was a very fiery debate, right? We had Olaf Scholz really trashing the FDP, his former finance ministry, saying that they're basically morally unfit to govern. We had Friedrich Merz of the CDU, the center-right, calling Olaf Scholz a failed chancellor. And then hearing more and more from the AfD, the far right. They now hold 20% of the vote here in Germany. They're an unignorable political force in Germany, saying that Germany is basically on the brink of collapse and that a vote for the CDU and Friedrich Merz is a vote for war with Russia. What we're getting today from the CDU is their official party platform. It's the official kickoff of this election. I know it feels we've been in it for a little while. We got it from the CDU. Now we're getting nothing too spectacularly new. Basically, the recipe is lower taxes, cut bureaucracy. You talk to people in Germany, no one can name the last time bureaucracy was actually cut in the government and cut social benefits. They think they could find 100 billion euros in a cut to social benefits. And we're going to get the same from Olaf Scholz a little bit later at 8 a.m. Eastern time, 2 p.m. local time, getting his party platform. That's going to be a lot heavier on the sort of spending. But at the end of the day, guys, the reality of the situation is there is going to have to be another coalition after this. And there is a fear in Germany that you're going to be basically just trading one dysfunction for another.
Ollie Crook with the latest out of Berlin. Ollie, appreciate it, sir. Thank you. Anne-Marie, we talked about this a few times. 2 months ago, the big fear of Wall Street going into the US election was dysfunction in American politics, not having a clear winner, working out how this could play out over the next 2 months, that maybe we'd be sitting here in January of 2025 still not knowing who would be the future president of the United States. And the truth has been, the stability is in American politics. The instability is almost everywhere else.
So my sources outside of Washington were always saying to me whether or not they were in the Gulf or in Europe about how conflict was brewing in America. But it's actually the opposite. There's two hot wars, and there's political instability stretching from South Korea to Germany to France to now Canada.
Let's focus on Europe now. We can turn to Claudia Buck, the ECB Supervisory Board Chair, joining us now following the bank's annual supervision press conference. Claudia, welcome to the program. We appreciate your time. A difficult moment for Europe, for political leaders, for policymakers. How are you preparing for the upcoming Trump administration, and what are you suggesting to policymakers they need to do right now?
Well, thank you very much for having me. It's actually not for me to advise policy makers what to do. So what we do here in ECB is that we published today the results of our supervisory review and evaluation process, which is our core health check, if you want, for the European banks. And one result is, and I think this is important in these uncertain times, one important result is that actually the European banking sector is robust. So we see good levels of capitalization, good profitability, and also good asset quality. And I think this is important because we're heading, or we are in a period of heightened uncertainty, geopolitical risks, and it's important that we have a sound and stable banking system.
Claudia, one thing that's fascinating to us is how much has changed in terms of the economic and structural paradigm. We were talking about how different things are than, say, 10 years ago, where banks were considered too big to fail, and that was the big risk. Now, how much is the bigger risk that too many banks, particularly in Europe, are too small to succeed?
Well, it's interesting that you mentioned how much has happened, because actually a lot has happened in Europe and with regard to supervision. So we have the banking union now. So for 10 years now, and we celebrated the 10th anniversary this year, we have common supervision within the ECB, and of course with an important role also of the national competent authorities, but the ECB is taking the decision on supervision. We are applying the same standards across all banks. We supervise directly the significant institutions, and we also have an oversight function over the less significant institutions. And I think this is great progress. We see it in the data. We see that there's better capitalization, better asset quality, and this is certainly, amongst other things, a success of the banking union and of the single supervisory mechanism. But of course, we need to remain vigilant, because there's, in addition to geopolitical risk, there's also structural changes happening in the real economy. So we watch very carefully how, and if so, in which form this would affect banks' balance sheets. So far, we are not seeing an increase in non-performing loans, although we're seeing an increase in corporate insolvencies across Europe, and this is something we are monitoring very carefully.
Claudia, in the United States, the concern is not about insolvency. It's not about risk to loans. It's not about weakness in terms of what the assets are on bank balance sheets. It's, can they grow enough? Let's go. Can we do mergers and acquisitions? Let's get that banking sheet back up. In the European region, one of the biggest threats to a lot of these banks is not the threat of weak loans right now, but a lack of loans and a lack of income and a lack of profitability that can really drive that strength to compete with U.S. banks. How much is that an increasing concern of regulators that have been tasked for the past 10 years with preventing weakness in loans?
Well, I mean, this is an interesting question, because I sometimes hear that what we do in terms of supervision regulation in Europe is too conservative and would prevent the banks from lending to the real economy. I mean, this is actually not what we're seeing. So generally, we've seen that with the reforms that have been implemented post the global financial crisis, the banks have become stronger, more capitalized, and actually they're in a better position to lend to the real economy. What is true is that loan growth has been moderating in Europe, but this is also to a large extent driven, of course, by higher interest rates, by the demand side, but it is not due to supply side constraints. As I said before, the banks are well capitalized and they have sufficient management buffers also on top of the supervisory prudential capital requirements.
Do you expect then any recent activities you're seeing, and you're saying there's health in this banking sector, but do you think we're going to see more deals next year?
Well, hard to say, hard to forecast. I'm not sure whether anybody has those numbers or those forecasts. I mean, let me say what I think is happening when it comes to consolidation in the financial sector. I think it's a quite natural response of banks to a changing competitive environment. And of course, the digitalization of financial services is a very important driver here. So I think it's really up for the management, the shareholders of the banks, to decide how they want to respond to this, to the changes in the competitive environment. And one way can be mergers, domestic mergers, cross-border mergers. And we have a very clearly defined role according to the legislation in the approval process. So we look at the prudential ratios, we look at the soundness of the stakeholders involved. So this is our role here. But again, it's not for us to decide, to take the decisions that in the end the management and the shareholders of the banks have to take.
Claudia, just a final question from myself. I'm just wondering how you view the current recent instability in places like France and Germany, and whether you're confident there is some distance between the performance of sovereign debt and bank equity, because we saw that correlation really spike 10 plus years ago in the Eurozone debt crisis. We've seen at times this year the European sovereign debt has been treated like it is credit, particularly in places like France. Outside of the Eurozone system, we saw that in the UK a few years back. How much confidence do you have around that issue this time around?
Well, I mean, what certainly gives me confidence is that the good capitalization of the European banks. And as I've said before, a lot has happened in Europe in the past 10 years. So it's not only that we have common supervision, but we also have a new resolution framework in place. We have more loss bearing capacity on banks' balance sheets. And so I think these are all very important factors that also weaken the bank sovereign nexus that we have spoken about 10 years ago. This was actually one of the reasons to have the banking union to break the bank sovereign nexus. And a lot has happened. So we clearly pay very close attention to geopolitical risks, to future uncertainty. So I'm not saying that these are not there, but the good level of capitalization and all that has been done to weaken the bank sovereign nexus should give us also comfort.
So lots to think about for 2025 for the continent and beyond. Claudia, appreciate your time. Thank you. Claudia Buck there, the ECB Supervisory Board Chair. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. The Biden administration has been trying to ease concerns about the thousands of drone sightings that have been reported in New Jersey and other parts of the Northeast. White House spokesman John Kirby told reporters that the drones are, quote, a combination of personal, professional, and government aircrafts. President-elect Donald Trump says he thinks that the White House knows more than it's saying. Trump added he doesn't think it's an enemy, but suggested his New Jersey golf course could be a target, saying that they are flying very close to Bedminster. Alibaba shares are falling in the Hong Kong trade, down 2%. It agreed to sell its in-time department store business to Younger Fashion for around $1 billion, offloading a non-core asset. The sale will result in a loss of $1.3 billion on Alibaba's initial investment. The e-commerce giant is struggling to grow with competition from rivals like PDD and ByteDance. And T. Rowe Price out with a punchy new call on Treasury yields, saying the 10-year may climb to 6% for the first time in more than 2 decades. Arif Hussain, the firm's fixed income CIO, pointed to inflationary policies and a growing deficit under Trump. Hussain wrote that he expects yields to reach 5% in the first quarter of 2025. That's your brief, John.
Danny, thank you. Appreciate it. Up next on the program, Trudeau on the brink.
We're now less than 2 hours away from the fall economic update. Why won't the Prime Minister have the courage to come in here, present it himself, and put it for a confidence vote tonight?
That conversation up next.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Equity futures on the S&P down by about a third of 1%. Under surveillance this morning, Trudeau on the brink.
Mr. Speaker, just to underline the chaos we're faced with here, the finance minister resigned the day she was to present the fall budget, which was going to contain a massive deficit overrun. We're now less than 2 hours away from the fall economic update. Why won't the Prime Minister have the courage to come in here, present it himself, and put it for a confidence vote tonight?
So here's the latest. Pressure building on Canada's Prime Minister as President-elect Donald Trump's threat of tariffs divides Trudeau's government. The Finance Minister, Chrystia Freeland, resigning just hours before she was due to unveil an economic update, writing, quote, "Our country faces a grave challenge. That means keeping our fiscal powder dry today, so we have the reserves we may need for a coming tariff war." Her parting shots pushing Trudeau's government as close as it's ever been to collapse. Mark McCormick of TD Securities joins us right now for more. Mark, you're there. You're following it closer than we are. What's next?
Well, I think what's very clear, this is a common theme. This isn't just Canada. This is happening in France. It's happening in Germany. It's happening all over the world. What you're seeing is that the election of Trump is a disruption to the existing order. And I think a piece of this is work together in the markets and work together in the economy. What we're seeing is central banks are trying to cut rates to stimulate the economy. Fiscal policy is being used to stimulate the economy. Voters are unsatisfied with incumbents, and incumbents are trying to find ways to maintain power. And that's just, when you think about where this is going, where you think the existing order is going, it's just very clear that, using like short-term incentives just to spend money to kind of help people ahead of an election is really not a long-term strategy for economic policy, especially when you think about innovation and investment. And again, this is a common theme that you saw in the UK budget. So I think this is not a piece of like what's going on in Canada. This is clearly not idiosyncratic. But what's very clear is that the political economy, what we're calling geo-macro, is a force that's creating disruption. It's creating more volatility, more uncertainty, and it's coming through the currencies first.
Mark, and how much does this really push people back toward the dollar, because there isn't another alternative that necessarily is more put together, whether it comes to the government or whether it comes to the economy?
Yeah, it just reinforces dollar exceptionalism, U.S. exceptionalism. These are things we've been talking about for months. I think one of the things that's very clear is we run a quantitative macro framework. We looked at different styles and drivers of markets. The dollar has behind it as a tailwind the equity market. It's got carry. It's got momentum. It's got essentially the terms of trade. It also has growth. So you can't think of a better mix. The one thing that's a little bit challenging right now is markets have been really focused on mean reversion. So positioning, short-term valuation models, those things have worked to predict currencies all year. But what we're starting to see is momentum is a factor that's becoming increasingly more important as we push into the new year. So I'm a little bit wary here of like people coming in and buying the dollar with a couple weeks left in the year. But it's very clear where we're going in the front half of next year, and it's going to be a strong dollar across the board.
But what about the end of 2020 going to 2026? A lot of analysts are talking about the fact that actually we could see some weakness or at minimum a plateau of the U.S. dollar.
Yeah, this is an important theme. I think because what we're seeing is a disruption to the global trade order. Again, you can look at, we have indicators we looked at for globalization. So if you look at globalization as a theme, hyper-globalization, economic and trade peaked 10 years ago. It's been moving sideways. But along with the correlation, the thing that you see is that as globalization was rising, hyper-globalization was rising, the U.S. trade deficit was rising, and the U.S. dollar was getting very expensive. So if you think about what is the North Star of the Trump administration, one thing that he's talked about, and one thing that I think is very important to their economic policy, is eliminating the trade deficit. You cannot reindustrialize the Rust Belt. You cannot reindustrialize the states that won it for this for Trump. This in this last election, Michigan, Ohio, Pennsylvania, Wisconsin. Those states, what matters, I think, is the reindustrialization and also the reduction of the trade deficit, which means you need to find a way to weaken the dollar. So I think what's going to be very important as the world's breaking apart and as the global order is being ripped apart, again, most countries are choosing national sovereignty over globalization. This is not a U.S. story. This has been going on for over a decade. And essentially, as that order gets picked apart, the dollar rallies. It's the only game in town. It's FOMO. It's all these kind of themes. But that creates the conditions for the Trump administration to address the major concern for industrialization, which is the trade deficit and the strength of the dollar, which again, if we look at our longer term valuation models, the cheapest currencies in the world are the yen, the renminbi, the yuan, Taiwanese dollar, all the Asian currencies that were low yielding funding currencies.
Elisa said it already this morning. What's the alternative? Mark McCormick at TD. Mark, thank you. Kit Jukes of SocGen questioning how much oxygen is left up here. We're driving the price of an asset up to something that is not sustainable over the longer term, but here we are.
Yeah, exactly because of the point that Mark was making. At a certain point, it runs counter to some of the tenets of the new administration. Just not yet.
Up next on the programme, we'll catch up with Dan Greenhouse of Solis Alternative Asset Management, John Lieber of Eurasia Group, Sharon Miller of Bank of America, and Dan Ives of Wedbush. From New York, the second hour of Bloomberg Surveillance. Up next.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important story.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Hi, I'm Laurie Haynes, CEO and co-founder of Shirar, and I'm really excited to tell you that we are going to be raising funds for Shirar again. After a successful raise in 2023, it's time to scale.
We hope that you enjoy the pitch deck and the financial model. Any questions, please don't hesitate to ask us, and we can't wait for you to be part of Shirar.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Focused on maintaining this easing bias.
I think the FOMC will go ahead now and cut by 25 basis points.
We are looking for a Fed that remains very sensitive in terms of the economy.
We are trying to maintain this soft landing, and the Fed has done an incredible job so far of doing that.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The Federal Reserve decision, I think 31 hours away. We're counting down eagerly. Won't be sleeping. Equity futures on the S&P 500 down by 0.25% on the S&P. Before we get there, we've got retail sales in America in about 90 minutes' time. 2 p.m. tomorrow afternoon, we'll hear from the Federal Reserve. Their decision and their outlook, new forecast, the update to the previous forecast, and a news conference with Chairman Powell 30 minutes after that.
Key question will be how he messages 2025 and really whether we get a sign of what kind of dissent there was under the hood. Remember, there was this huge battle on the Fed about 50 basis points. It seemed like Jay Powell jawboned them into that 50 basis point initial cut with that expectation that things would weaken. Now, how does he message a concern that maybe things aren't really that weak and that maybe there is the fear of reacceleration?
And you have that with Neil Dutta coming out and talking about concern is actually going up. Labor markets have been cooling. Home building stocks are presently underperforming despite rate cuts. I see myself in the more cautious side of the consensus at present. 2025 is going to be very difficult for the Fed, and what we just heard from Mr. McCormick up in Canada, this idea that it's actually geo-macro events driving financial markets.
The dollar's still strong. Why? To that point, France is a mess, Germany's a mess, Canada's a mess, South Korea's a mess, the Middle East's a mess, China's a mess, the list goes on and on.
Which is the reason why maybe the vigilantes have kind of taken a breather, except for T. Rowe Price, who seems to be still in the vigilante bandwagon. But it raises this question of, can the U.S. continue its fiscally reckless policies because everybody else is even more fiscally reckless and doesn't even have a government to boot? So at a certain point, does that give people confidence about the U.S. or just, go into Bitcoin, which maybe is why Bitcoin's been rallying?
What do we say on this program? The unique privilege of acting recklessly. That's what the United States have.
That's what we say on this program.
We. Slash
We're really going to do this. I know. All right.
We're in it together, Bramwell.
Yeah,
How many times do I have to say this?
Absolutely. The unique privilege of acting recklessly like I feel like I do every morning.
Every single morning. Coming up this hour, we'll catch up with Dan Greenhouse of Solis Alternative Asset Management as the NASDAQ hits a fresh record high. Sharon Miller of Bank of America on the state of small business in America, and Dan Ives of Wedbush as Tesla hits another all-time high. We begin this hour with stocks mostly flat, the NASDAQ coming off another record as investors await a highly anticipated Fed rate cut. Dan Greenhouse of Solis seeing plenty of opportunity next year. It's been a tremendous year for both equity and credit, which understandably leaves many investors fearful of sounding too optimistic entering 2025. We feel differently. The economy is doing fine. Inflation is largely normalized and the consumer remains strong. Dan joins us now for more. Dan, it's good to see you.
Good to see you, sir.
Would you say the street is uncomfortably bullish then going into next year? Because overwhelmingly it feels like people are bullish because they feel like, what's the alternative? What else can they be? Is there some career risk associated with being slightly bearish in 2025?
I think uncomfortably bullish is the right way to put it, at least my interpretation from talking to people around the street and watching Bloomberg TV at 7 a.m. as I do every morning. After 2 years where the S&P is up 20%, high yield and loans, and even the lower rated credits are up 10% or so this year, and there's a feeling, well, this can't continue. And so there's a hesitancy to sort of embrace this. But in reality, I think, and you guys talk to people obviously for hours a day, every day, I think there's been whether you're listening or not, Lisa, is a separate story, but...
Thanks for really beginning on a great note. Carry on.
There's been a hesitancy to embrace the bullish tone of things for for several quarters now. So in that sense, I don't think it's anything new.
Is there a difference between what people are saying and what they're doing? The Fund Manager survey out from Bank of America says things are tremendously bullish at the moment. Cash allocation record low, US equity allocation record high. Do you sense things are that frothy? Sentiment is that high?
Yeah, I got asked the other day whether I thought this was euphoria, and no, I don't think it's euphoria. Clearly, the Bank of America data that you just referenced plays into positioning data, which suggests that people are certainly invested and depending on how you measure positioning, at the upper end of the range that's prevailed, let's say, since the GFC. So people are certainly in the market and expecting it to continue. Do I think it's euphoria? Listen, I don't. I guess the subsequent question thereafter becomes, well, what separates what we're experiencing now from euphoria? And I guess thinking out loud here, there's still an acknowledgement. You mentioned the geopolitical risks on the way into this conversation. There's still an acknowledgement that things are not great. Incoming President-elect Trump's policies could be inflationary. You could have a widening of the wars, et cetera, et cetera. So I think euphoria is probably an environment in which all of that stuff is not even acknowledged. And I don't think that's where we are now.
Vulnerable is another way to put it. That at a certain point it is a market that becomes increasingly vulnerable to a potential shock when everyone is in one trade and they feel like they've been pushed into that one trade because there is no alternative. Do you feel that vulnerability in some of these crowded trades where, you know, one thing could go wrong that's unforeseen and it could really torpedo a real mass trade that could lead to an exodus?
Listen, and I don't think this is a particular secret, or I'm certainly not breaking any headlines here, but if something happens on the AI demand side of things, what my argument for a year has been, when people talk about this, everyone's in the trade or we're susceptible or vulnerable to it, we have seen no evidence from virtually any of the companies involved in this technology development that demand is weakening at all. And when you look back to the and we talked about this the last few times I've been on, when you look to the 90s, Floyd Norris in the New York Times talked about the stock market being in a bubble in 1995. Greenspan's irrational exuberant speech was 1996. And obviously we still went on and had 97, 98, and certainly 99. It wasn't until 2000 when you started to see those demand trends weakening. It's not like we didn't know along the way that we were overbuilding. There was the story about the telecom cables could wrap around the earth 1,000 times or whatever it was. We knew we were overbuilding, but it still took until those demand trends weakened for the broader environment to really, to borrow the word I just used, weaken. And I think now, whether it's AI or Broadcom the last 2 days, or any of the derivative trades, I haven't heard, and again, I've said this 100 times, Solis is not a particularly large tech investor, and we don't own any of these names, but I haven't seen any suggestion from anybody, either on the sell side or from the companies themselves, that demand trends are weakening. All I keep hearing is demand exceeds supply from just about anybody who has any comment.
One thing that Solis does have a pretty big footprint in is looking at the potential combinations of companies, particularly in media space, particularly in a couple of other industries. And this has been an area that a lot of people think is going to be really hot next year. How much are you seeing that in sort of the ground up analysis of companies in different sectors, and which sectors do you see the most active discussions?
Well, we had the Lamb Weston headlines the other day. I think I'm certainly in the camp that thinks next year is going to see a pickup in M&A activity. You see this, the issuance trends are emblematic of this, and just CEO body language is emblematic of this. So I'd expect to see that. One area, you mentioned Solis's involvement in the media space. I would point, for instance, to what's going on with Comcast and Warner Brothers spinning out the linear, or to oversimplify it, spinning out the linear networks. The assumption is they're going to combine, and there's a lot to do there from our standpoint. I think when people think about high yield and credit investing, a lot of that conversation becomes about Dish or Altice. But those are the types of things that we pay a lot of attention to. Solis has a 20-year track record of investing in the media space. And I think there's going to be a lot there to do in that space, for sure.
Are you expecting, then, a light regulatory touch?
So I think the conversation is, well, Lena Khan's gone, so it's game on, and I don't think that's the case, and I think you and I have talked about this in the past. I think when you really, and I'm sure you're well aware of this, when you really dig into J.D. Vance's philosophy and the people around him, it's not a game on type philosophy. There's still going to be a scrutiny of the big tech stocks in particular, of the tech companies in particular, but I also don't think, I mean, listen, Josh Hawley, J.D. Vance, Tom Cotton are not going to greenlight any merger, so to speak, either in the public domain or actually from the FTC standpoint. I think there's still going to be a lot of scrutiny here, but will it be lighter than what we've experienced the last couple of years? I think that's unquestionably a yes.
You were with us on election night. Do you think that this idea of the Trump trade is just overrun, though?
No. Listen, I think, well, I guess maybe yes. Half no, half yes.
What's the no and what's the yes?
So the no is, listen, we're going to have a friendlier business climate, the CEO confidence. Bloomberg has a story this morning about CEO confidence spiking up. You saw it in the small business survey. Small businessmen are apparently all Republicans because that number spiked up to the highest level.
Yeah, there's political bias in some of these surveys.
There's certainly political bias in some of these surveys. And by some of these surveys, we mean all of these surveys. But so in that sense, no, this is going to be 2 years at least until the midterms, probably 4 years of a more right-leaning, business-friendly climate, and so that's going to persist. At the same time, I think there's, and I'd be curious of your thought on this, there's a lot of enthusiasm and optimism about what this administration can accomplish, and I'm a little more skeptical. I think obviously the TCJA is going to get extended, but can you also afford no tax on tips? Can you also afford a further lowering of the corporate tax rate? I'm a little skeptical that this Congress is going to pass that.
So you're skeptical of the good stuff that would be beneficial to the market and the business climate, but what about tariffs and things that can actually have a negative impact?
Yeah, I enjoy this conversation a lot. I think that the talk around tariffs is just so universally bearish and bad. And listen, I don't want to give away my free market bona fides here. Like, certainly tariffs are not optimal, but I also look back in the period in which we had tariffs, and I don't remember them being dystopian in any meaningful way. I mean, obviously, everyone likes to point to the headline index. There was no meaningful jump in inflation, but when you dig into the core goods data, there was a reversal of the multi-year downward trend. So core goods prices certainly did respond. But if we can simultaneously get the currency to move, if we can simultaneously get oil prices lower, maybe incoming President Trump is a little friendlier with the Saudis, and we can maybe get 1 million barrels back on the market, and we can get oil down into the 50s. That'll help compensate. And so
how are you going to do that when U.S. companies are actually pulling back, like Chevron at the Permian? There needs to be a higher price to actually incentivize American companies to want to continue drilling.
Well, listen, I mean, we're pumping 13.5 million barrels right now, essentially a record high. So output in the United States is not the issue. Obviously, you've got the voluntary curtailments across OPEC, several million barrels, spare capacities in the several million barrels. Obviously, they keep trying to bring that back on, but we're worried about Chinese demand. And so there's a lot of moving parts here. But I also think geopolitically, if you're President Trump, your goal is going to be to lower prices. And what is the easiest way to do that? It's going to be much harder to spur additional production in the Permian than it would be to just somehow get the Saudis to agree to pump a little bit more oil, which they might not. If you can compensate that by lowering Iranian output, then...
Or Russian. Yeah.
Or Russian. Iranian is probably easier, because the Iranians are back up over 3 million barrels right now. That is up a lot from the day President Trump left office. If I'm President Trump, optimally, you get 1 million Iranian barrels off the market, you compensate that with a million Saudi barrels, maybe you depress oil prices a little bit in that environment, win.
They clearly want to run this hard. Just a final question to you.
We just started. How is it final already?
You're about 12 minutes into the segment. High growth, low inflation, disciplined on fiscal. Out of those three, which one do you think will be more difficult for the incoming administration to achieve?
High growth,
low inflation, disciplined on fiscal.
Fiscal. There's no one in Washington. This is a parlor game that we've played for decades now. There's no one's cutting spending. Spending never gets cut.
Is Elon watching?
I hope he's. Listen, I'm happy. I mentioned last time, I'll go work for Doge, not full time, but I'll go work for Doge. This is not brain surgery. The CBO puts out a report all the time, all the different ways you can fix the deficit. Former Senator Tom Coburn, now Rand Paul, puts out I forget the waste book it's called. All different ways that you can cut. This is not brain surgery. There's the famous movie, not famous. There was the movie Dave, where the fake president comes in and he brings in I forget who it was. Charles Grodin. And Charles Grodin's his friend. He's an accountant, and he sits down and he looks at the government books and he goes, "This is the worst looking thing I've ever seen." If you put 5 Republican economists or government fiscal people in a room with 5 Democrats, they can solve the problem over lunch. The problem is no one knows how to get elected once they fix the problem.
It's true.
Which is why nothing's getting done.
It's good to see you. It's why yields are still